And today is more of a beginner series where you understand everything now in Rayman. We also do practical order placement both on the app and the portal, so that at least from Monday you are able to trade on your own. For those who are joining, we have not yet started. Those who are joining, we have not yet started. We are starting at around 10:10 to allow everybody to join. I'm just going through just the basics of what you expect. We are in dividend season, so you need to understand how dividend works so that you don't make mistakes. And if you have noticed, NSE have really changed these days. You find dividend is announced, instead of prices going up, sometimes they go down, then stabilize. I think I'll be able to answer that in this training. You will also be able to understand how bonus works, because I think that's something you now start seeing, as most companies shy away now from giving cash dividend to giving bonus shares, and also how splits works. So that when you see splits announced, you don't panic and you start selling. If you see bonuses, you don't panic and start selling. When you see rights issue, again, you don't panic and start selling. So you'll be able to go through all these. I want by the end of the today's session, at least everybody is able to train or to trade on their own. And when you see any research materials out there, you should be able to know when to react. So I'm just giving up to 10:10, then we start. So basically at the end of this training, you'll be able now to train on to trade on your own without even relying on a broker. In terms of price selection, there is a very important screen we usually call market depth. Can always use to make decisions. We'll go through all this. Then very important, the whole process flow of trading. I think that is something that has been missing in the market, because once you understand how money moves from you to CDSC and back to you when you sell, then I believe now you'll be a very confident trader, where you don't even need to worry how much you're putting in the market, because you already now know the whole process. That is the main aim of this training. And for those who are just joining, we have not yet started. We are just giving 7 more minutes as I check whether there is anyone who is locked out, so that I can assist them in joining. I don't want anyone to miss, even if the recording will be on my YouTube and also my TikTok. It is easier when we do it live, because that way you're able to follow through the process. Okay, welcome again. Sorry for that. I was just cleaning up something I've seen on the new group. I would request we don't spam those groups, the WhatsApp group and also Telegram group. They are purely for training, and as you have noticed, it's free trainings. Please let's not do self-promotion, especially for risky products. For those who are joining, we have not started. I was just cleaning up so that you also don't fall off victim to some of those groups. So I think we can start. If you can hear me, just say hi. Maybe you can say hi on the chat. Okay, you can lower the HUD. I think we can start. So today is a beginner friendly training, so that for those who have who are new in the market, you understand how it works. For those who are already in the market, you also understand how things now work practically, from you trading all the way to NSE. And let me share those links again. There is a WhatsApp group. This is a new one. If you're already on the first group, kindly don't join on the second group. The other one got filled, so I recreated a new one. Then there's a Telegram channel for those who are on Telegram. Then we have a WhatsApp channel where now I do just the normal communication. If you don't want to join groups, you can follow the channel. Then there is YouTube and TikTok where I post the videos. TikTok, mostly you find the videos which I'm not able to upload on YouTube because YouTube has a bit of a restriction I usually put on TikTok. Like the one for onboarding on international markets using Interactive Broker. Apparently, I'm not supposed to be showing my address on the video, which I'm editing, then I put back on YouTube. But you can find the full video on TikTok. So today I want us to go through NSE trading in details from beginner to how you receive dividends. So that when you are buying, at least you know what you are buying. When you're investing, you know which shares to buy. And what happens when you buy shares, so that we no longer have the speculative trading and we move to investors. So allow me, let me just configure this. I think now we can start. So today we are going from beginner to a confident trader. What does that mean? When you're placing orders, most of you find you're hesitant to press that buy button. You don't know what happens when you press that button. So today you learn how to trade on your own. Understand, like now most companies have announced dividend. What does that mean for you? What happens after dividend? Bonus shares, what happens? You see it in some of the companies. Splits, we may start to see share splits at NSE because of the high prices. If you don't see the high splits, then we might see the market prices starting to stabilize, then maybe fall at some point, then start to rise up. They cannot go up forever. There is always a limit to where the prices can go. And if it reaches at some point, NSE may propose to those companies they do share split or even issue bonus shares as dividend to lower the prices. So I will explain all that so that by the end of the session, when you start seeing some of these things in NSE, you already know how to react. And all these trainings are free. I don't charge, and I intend to bring more. As you can see there is a training plan which I plan to do most of the stuff NSE global. So tomorrow we'll be doing international stocks, now from a beginner perspective, covering both Interactive Broker and also Scope Markets, Kenya, and ETFs. Then on Sunday we might do boards, treasury bills and treasury boards, including opening account at CBK. So in every training we'll be doing even how to open accounts, so that it's not more of a theory. So today NSE, tomorrow international stocks with Interactive Broker and also Scope Market account opening process. Then on Sunday, boards, that is treasury bills, treasury boards, corporate boards, and how you open a CBK account through CSD platform. Then as we go on, I will introduce other products. So let's go straight to the training. So we start with just the basic understanding of shares. What are shares? In a layman language, I don't want to use terminologies where that terminologies I try and make them as simple as possible. And remember, you can put a question on the chat on NSE and anything you want to understand both the NSE and global. Today, I'm happy to answer all those. Just put on the chat. So let's start with the share trading. When you're buying shares, what are you doing? Have you ever asked yourself, I've bought Safaricom shares. After that, what do I become? You don't just buy shares at NSE. When you do share trading, you're actually owning part of the company you are buying shares from. Apart from GLD, gold, which is an ETF, and also SMWF. But SMWF, you're actually becoming a shareholder of many companies in international market. SMWF usually have international stocks within it. I will come to all these when we go into the digital platform. So don't worry what SMWF and GLD, if you're a beginner, what they mean. So it's only those two that you don't have ownership of a company. The rest, you own that company indirectly. So a share is like owning a small piece of the company. Safaricom, for those who know how you start a company, when you start a company, there are those shares that you list. If you wanted to expand the company and maybe you need money, you can float those shares at NSE, maybe through IPO. So other investors come in, give you money, but you share with them ownership of that company. So it's the same thing here. Safaricom, when it started, it listed its shares. Then the government decided, let's sell part of our ownership to others. They also become part of the company. They listed Safaricom during IPO. We applied and we became shareholder. The same thing with KPC. Government decided, let's sell part of our ownership, 65% to the public. So you apply and you become part of the company. So when you buy shares, you are owning a small piece of company, depending on the number of shares you have. Even if it is one share, it is a 0.00 something percent ownership of that company. You are a shareholder, a part owner of that company. So when you buy shares, you become a part owner. Remember, everybody have their portion of ownership in that company. So when you buy shares, you also become part of that company. Only that you don't have direct say in the management. So a good example, like if you buy Safaricom shares, you own part of Safaricom. Yes, if it does well, you are doing well. If it does poorly, remember also you are part of that company. So the way it works, a company like what I've just described, the recent IPO, KPC, they just split their shares into small units. Then they come and decide, let's sell them at a certain price. So one share is 9 shilling. You all apply. If they have hit the target of the funds they are looking for, they decide to allocate everybody the shares. So you allocated some shares. Let's say you had applied 900 shares. That's what you get as a shareholder. And first disclaimer is that in NSE, you don't need to be rich to start. Secondly, it's not a quick rich scheme where you put money and tomorrow you expect to see profits. Unfortunately not. In a product where you're putting money today and tomorrow you are a millionaire, trust me, either it is illegal, unregulated, and risky. Again, illegal, unregulated, or risky. I think in the investment products that are in capital markets here, I mean anything that is approved by the regulators, either locally or internationally. Only shares have the highest gains. You can't predict the gains in shares. Then comes in special funds. Special funds invest in international markets and some risky products. That's why they give high returns. Then boards. You come all the way down to bank savings in terms of returns. But in terms of safety, now it starts from the bottom. Bank savings are the safest coming upward. I have never seen where you are saving your money in a savings account which does not attract charges, and you lose even your principal. All the other products, you can easily lose your principal, including bonds, because the government can default. You see that on Sunday. The rest, prices keeps on changing. Interest rates keeps on changing. There are management fees which can eat into your principal. So for NSE trading, you don't need to have a lot of money to start. Like if you had to ask me, how much do you need to start? If you had to ask me that question, I would only answer you with the one answer, which is the cheapest share at NSE. It would be average 1.2 shillings. Factor commissions and stamp duty, which is 2 shillings. So you add, it comes to around 3. Add brokerage around 4 shillings. So you only need 4 shillings to start trading at NSE. Yes, that's what you need. 4 Kenya shillings to start trading at NSE. Why? These days you can buy 1 share. You go for the cheapest you can start. You go for the most expensive, which is gold 6,000. You only need to factor commissions and levies and stamp duty. It won't even go more than 6,500. So if you're looking for the most expensive 6,500, the cheapest, just with 2 shillings, you are in the market trading. But then that 1 share, can it help you? You're investing 1 shilling or 2 shilling to start. But then how long will it take for you to make gains in that 1 shilling? You can't even make 5 shilling or even 4 shilling. It's highly unlikely. And even if you make, it's only when that share rallies. And remember, when it's rallying up, you may not be able to sell. So even if you're told it is easy to get to NSE, always come with a view. What do you want from NSE? Remember, it's money you're putting in there. You're not testing with money. This is not betting. This is not Forex. You cannot lose your money in full. In shares, if you are losing money in full, it means that company, it's not even bankrupt. They don't even have assets on anything. That's the only time. And before that time, CMA will have suspended. So for NSE, you can start with any amount, as long as you know which shares you are buying. So think of it like the way we buy cows. A cow. When you buy a cow, you own it. This cow must benefit you. So even if you're buying shares at NSE, those shares have to give you milk. How do they give you milk? We'll come to that. So don't just put your money, even if you can start small. Remember, you are in the market to gain. So put substantial amount that is within your disposable income. Disposable here means you have factored out costs, your expenses. If you do other savings, you have factored any the leftover you can put in NSE. If you're not giving priority to the other savings you're giving NSE, then again allocate appropriately so that you don't put everything at NSE. You forget there are also other investment products out there. So then we have said this is a cow you have bought. Let's say it's a cow that is owned by the whole village. So you own part of that cow when you contribute. It's the same thing you are doing in shares. Then how does it benefit you? It has to give you milk. Now in NSE, shares give you money in 2 ways. One of them is price growth, capital gains. You have heard this time and time again. Capital growth, capital gains, price growth, all of them means the same. It's just pure profit. Profit by buying shares at a low price, selling at a high price. A good example, you buy Safaricom, let's say at 20. Then you sell it at 30. That price difference, 30 minus 20 is 10 shillings per share. Now imagine owning just 1 share. This price takes 5 years to reach 10 shilling. Remember, there are levies and commissions to pay. So does that 1 share help you? That's where now you need to multiply the profit times the number of shares. If you have like 10,000 shares of a share that is you bought at 20 and it is at 30, you have made your 10K. Factor out commission and levies, which could be 100 or 200. So that's how capital gains work. You buy enough shares at a low price, sell high, and you have to sell. Otherwise, if you don't sell and price goes high, That is usually called paper profit. Paper profit is where you can see profit in your portfolio valuation, but you have not been able to sell those shares and realize that gain. If price goes down, you still be at a loss. Even if it's shown you at one point it was in profit, remember you have to sell to get those profits. But don't be quick to sell. Remember the prices, they keep on fluctuating, you see. At one point they are high, down, then at one point they go high. Then when do you sell? You don't just wake up and see profit and sell. Remember, prices may continue going up. So if you are selling, you have to make one decision. Either you accept to buy at higher prices again, or you wait until, I don't know, when the prices come down, you buy back, or you move to another stock that is low in price, then you buy and wait for it to go up, or you sell completely and get out of the market. Maybe move to another product. Otherwise, don't just buy when prices go above a bit, you want to sell, then you wait, you want to buy back. You'll be losing because there are commissions you are paying for every transaction. The second way is just the passive, where you just buy and you relax, you have peace of mind. Buy companies which are profitable. We have seen companies announcing results. We have Equity, we have KCB, we have other shares I will show you announcing results. You buy into those companies, not when prices are low, but when you have money. Now, dividend and capital gains are different. Capital gains you buy when prices, you anticipate these prices are low and they go up. Dividend, you are not worrying. Here you are investing for long term. You buy profitable companies, companies that announce profits. EABL, BAT, Stanbic, Stanchart, KCB, Safaricom, Absa, such stocks that give dividend. When they make profits and they announce that profits during their AGM or when they are announcing results, they usually declare and say, our directors have said and the board have recommended that each shareholder get a share of that profit. So if they make 10 billion, they divide by the number of shares. They decide we are giving for every one share held this amount we are paying. So if you own like 1,000 shares and a company pays maybe Kenya shillings 1 for every share held, you only need to multiply the dividend by the number of shares. You get what you receive, 1,000. Less withholding tax, which is 5% for Kenyan. Foreigners is 15%. You don't need to calculate all that. I will show you the calculator that you can use. It's a free calculator I created just for the market, where now you get the shares which have announced dividends. So basically, dividends, you are not selling shares. Company announce, they say we are giving you dividend on this day. Your shares are still there. If prices continue going up, you're still in profit. If they go down, you're maybe in a loss. But you have not sold. But remember, this company have said we are giving you dividend, free money, without you selling. Then as you continue holding, maybe at the end of the year, they decide again, let's give another dividend. You have not sold. Even if your shares are in red and dividend is coming, what you only need to concentrate on is not the loss. You are supposed to concentrate on the dividend amount, because we forget one thing. You have taken dividend over time, but you are complaining your shares, you are in a loss. Remember, dividend is free money. Even if shares are on a loss, calculate the dividends you have received from that share. Add it to the your portfolio valuation. You see whether you are in a loss. We forget to calculate the dividends. Remember, prices will go down, will go up. Even if it is at a loss, at one point it will go up. And we will come to portfolio valuation and what it means when you see your shares are in a loss position. You don't need to sell. There are reasons to sell and there are reasons not to sell, even if they're in a loss. So a simple idea of how you make money at NSE with shares. We have said when you buy shares, you are becoming a shareholder. When prices go up, you can sell. Those are gains. If you don't sell, paper profit. Paper profit means you have just seen it in your portfolio, it has gone. It's like a good example. When there is campaign and people are given that free money, and you are studying very far away, It will just pass you if you don't go and pick. It's the same thing here. If your share is in profit, it is in green. If you don't sell, it will just pass you. The next thing, prices go down, you're in a loss. But does that mean when shares are in profit, you sell? No. If it is a profitable company, it will give you dividends. So price goes up, you can sell your gains. If the company is not giving you dividend, if it's giving you dividend, then just hold. Unless prices are way too high that you feel taking capital gains is more better than holding on to that share. So then we come to price movement at NSE. We have seen prices going up and down, but why does that happen? In NSE, we have two people, the person who is buying and the person who is selling. Just like the same way in the market, you have people who are buying products and there are people who are selling them. If there are more people buying than the sellers, prices will always go up. If there are more sellers than the buyers, prices will go down. It's the same thing. If you flood like a market with a lot of tomato, prices will go down if there are no people, many people buying. What if there is a shortage of tomato, but there are many people buying? Even suppliers, they hike the price. It's the same thing in the market. So more buyers than sellers, prices always go up. But that does not mean in terms of numbers. It is in terms of quantity. Because even one person can control the market. If you have like 1 million shares of Safaricom, you just put them there at a certain price. Before that 1 million clears, it will take some time. It means the number of shares that are trading. If they are more than the number of shares that are being bought, then prices will go down. Huh? If on the other side, there are more number of shares being bought than what is being sold, prices will go up. So that's what moves the prices. You may ask a question, then how comes all of a sudden price can jump? Because of announcements. It's because when an announcement is positive for the market, people hold the shares. Create a gap in between demand and supply. People want to buy, you clear everything on supply side, you push the prices up. If it is a panic news like losses or anything, people will stop buying. We remove the orders to buy. You want to sell quickly before prices go down, you push the prices down. So basically that's what happens in NSE. Price jump is because of the gap that is created by panic or people just getting in clearing the prices. So if everyone wants to buy Safaricom shares, definitely prices will go up. If then everyone is selling, prices will definitely go down. And there are reasons why people want to buy shares, and there are reasons why people want to sell their shares. In NSE, alongside the shares we have said you are becoming a shareholder. So when you buy shares, you are becoming part of that company. You own that company. If you have shares in equity, you own the equity bank, but not directly. You are not a direct shareholder. Before we go to ETFs, let's go back there. What happens when you're buying shares in NSE? Remember, there are two ways you can buy shares at NSE. Through IPO and right issue. That is where a company is listing the shares the first time. The shareholders, the existing shareholders want money. They just decide, let's give part of our shares, we get money. That rights issue is where a company have already listed at NSE but wants additional money. So it tells the existing shareholders, by the way, you're entitled to get additional shares. Can you give us additional money? It's the same shareholders who are saying, let's give additional shares. So you had already given during IPO. Let's add more from what we have, but get more money. That's rights issue. Now, in NSE, when you are buying from NSE directly on the broker app, broker portal, or directly through a broker, and it's not IPO or rights issue, it is somebody who wants to sell, maybe at a profit or at a loss. Again, at a profit or at a loss. So you are buying out somebody's profit out, you get in. So you are giving somebody else's money You give them the money they initially bought the shares at, plus the profit they are made. Or you are selling at a loss, maybe the share is going down. So what you are buying that loss into your account. So always note, when you're buying shares, you're either buying a profit into your account or a loss into your account. What does that mean? For you then to make money, you have to sell back to somebody else at a profit. Whether you bought somebody else's loss, which you don't know, or profit, which you don't know, because it's only them who can see their portfolio valuation. So when you are selling, you need again to sell at a profit. So basically, when you're buying Tennessee, always remember you are bailing out somebody. Somebody have come to sell their shares, you are buying from them. It's the same thing when you go to the market. Somebody is either selling good tomato or bad tomato at a profit. So if you, when you take those tomatoes and you want to resell them, you may want to sell at a profit. The same thing here. You are buying out somebody. So when you be selling, somebody is buying you out. Remember, they have to buy you out at another profit so that you gain. So that is shares. We come to ETFs. They are called exchange traded funds. If you have ever invested in Mansa X, Avocap, and the rest, those are funds. And also any other money market fund. Now, what exchange traded funds is, like now those Akina Mansa, they are listed at NSE. You buy from NSE instead of sending your money to a fund manager. So it is listed at NSE and you buy like shares. In international markets, you have real ETFs where it is a fund manager who have packaged so many stocks into one. They send them to exchange to trade. Now, ETFs is a basket of many stocks or commodities that are combined into one. You can buy from one unit upward. So instead of going to NSE, you start buying one share, another one. They are packaged into one, then you buy as a one unit. A good example, when you go to the market, instead of buying individual banana, mango, melon, they are packaged into a one pack. And you buy that one pack, but inside it has different fruits. It's the same thing when you're buying ETFs. Many stocks packaged into one, you buy that one unit. Like SMWF, as I said, it has most of the international stocks inside it. Akina Nvidia, Meta, Google. So when you buy SMWF, you are buying indirectly into Nvidia, Google, Meta. But that does not mean you are a shareholder of those companies. You own a very small, a tiny portion of those companies. We also have gold, GLD at NSE. So when you buy GLD, you are owning a piece of gold wherever it is stored. It is usually in South Africa, Absa Gold. It's like you own it, but not physically. It's, how would I give it? Let's go back to our cow. One cow is sold to the whole village. Everybody have contributed. So everybody have an ownership in that cow, even if it doesn't reside in your compound. It's the same thing here. When you buy GLD, you own a piece of that gold, but not physically. It is still in South Africa. But if you go to South Africa and ask them who are the owners of this gold, Peter's name will appear because he has a small unit. So I hope now you have differentiated the two. Shares, you have direct ownership of the company. ETFs, you buy many companies, small units into one unit. In NSE, we only have two, GLD and SMWF. Then why are ETFs good for beginners? One, they are less risky because you're not relying on one company. It's not like when you buy Safaricom, if prices go down, you're panicking. No. ETFs, they keep on rebalancing. Stocks which are not doing well, they are removed. Stocks which are doing well, they are added. So ETFs, you hardly find the price fluctuating down. They're also easy to invest because instead of just going and buying one unit of each share. You're just buying one unit of ETFs and you own many companies at once. And also good for long-term growth. Why? Remember, because of this rebalancing, ETFs, they hardly lose in value. Even if price drops, it's not a huge margin compared to shares. Shares, they may drop with a very huge margin, but ETFs, you find they fluctuate within a certain range. So they help you preserve your capital, and also that is capital is the money you are putting, and also gain with price movement. There are also ETFs which give dividends in the international market. We'll see that tomorrow, God willing. There is a training tomorrow. It's a Saturday. Yes, around 10, same time for international stocks, where we'll be opening accounts, as I said, with Interactive Broker and also Scope Markets Kenya. For those who want to invest using M-Pesa, Scope Markets is there. If you want direct ownership, I don't want to talk about Scope Market Kenya a lot. We have done some partnerships, so I may know in and out. Then we have Interactive Broker, where you want direct ownership of shares. But again, there is a cost of transfer, but I'm also trying to see how WISE works in Kenya. It works because then there is a way you can pay via M-Pesa to Interactive Broker. So there you find very good ETFs in international markets. In NSE, there are only two. And those two, it's only good which you can play around with, even day trading and SMWF. I did the training last time, which then promoted for me to do this beginner series so that you understand what you are buying. So for ETFs, instead of now struggling to know which shares do I buy, you have 56 shares to choose from. ETF packages, maybe 25 of them you just buy as one unit. So it resolves your issue. And you don't have any headache of knowing whether those shares are performing well or not. Your work is how the ETF is working. The index that is tracked by that ETF, how is it performing? So we compare shares. We have said shares, direct ownership of a company, ETFs, direct ownership of many companies but small units. So shares, you only own a company at a time. It has high risks but also high rewards. Share prices, they have no limit, as I said. Share prices can appreciate. Like now, those people who bought in 2024, the ones who bought shares in 2024, they may have made some good gains so far. Some very good gains. Over 100% in most of the stock, apart from a few like Akina Uchumi. Those ones, it was pure speculation. Pure speculation. So shares, you have no limitation in terms of what you can gain. So like a good example, when you buy Safaricom alone, that is a share you're owning. Equity, you add KPOC, those are shares in your portfolio. But now ETFs, it's like now all those shares are packaged into one package you buy as one. SMWF, as I said, when you buy it, you're owning Akina Nvidia, Microsoft, Tesla, inside it, small portions. But then the way it works in international market is not how it is working at NSE. That's the reality we have to understand. I'll be showing you tomorrow how international markets work. International market ETFs follows an index. An index is like a benchmark or an indicator of how those stocks are performing in the market. If it goes up, ETF price goes up. If it goes down, ETF price goes down. But again, remember, fund managers or the ETF provider will come in, check the shares which are underperforming, remove them, add new shares. So that's why they have low risk and they are very good for beginners. In NSE, it is the opposite. It is us who drives the price. Like now, gold. We all want to buy, we shoot the prices up. We panic, we want to sell, it goes down. It doesn't follow the price of gold outside. So then we come to key players in the market. So you have understood the shares. you're owning a company. When it does well, you gain through dividends and also price movement at NSE, capital gains. ETFs, you own many shares as one unit. Price movement, you gain. There are those ETFs which also give dividends. Then when you come to NSE, who is there? We only hear NSE, but who is behind NSE? There are key players who make the share trading possible. And some of them you interact either directly or indirectly. Remember at NSE, you can't walk to NSE and tell them I want to buy shares. They'll actually be worried. Because first of all, how do you pay them? Secondly, who are you? That question, they'll start asking so many questions because they don't have your details. They can't open CDSE account for you. If you go to CDSE, you tell them I want to buy shares, they will ask you how. We don't have the system. We don't even know you. You have not opened a CDSE account. We don't open. If you go to the broker and tell them I want to buy shares, they will actually tell you, come, sit down. This is the process. If you go to company itself, you can't buy shares directly. They'll actually ask you, where are our shares trading? Because even them, they may not know which shares you're talking about. If you go to the registrar, they'll actually be worried. Which company are you talking about? Do you want shares for another company or it's which company? So once you understand the role of each player, then it will become very easy for you. You will even know where to go if you have an issue. So you go through a system. There is a proper system at NSE, ensuring your safety, ensuring you can track your funds and portfolio, and the whole process is transparent. Look at it when you're buying land or a plot. What happens? If you're going solo, you want to buy a plot, it can take you forever to get actually a genuine land. Even getting to know who is the owner, even the land that is being sold, unless you see a poster by you're selling land, but then somebody have to give you that number. Otherwise, you need an agent who knows everybody, and a registry or a register to confirm who owns that land. So an agent, a trusted person, who can give you all the information you need, help you fill the documents, transfer ownership and everything. And also a registry where now you need to confirm, the agent have told me this land belongs to this person. Does it actually belong to them? And when I want to buy, I will also be added into that registry. We start with a broker. A broker is a company or a person. Initially, it used to be a person that time, a long time ago, until regulations changed and there were minimum requirements. Now it's a company. So a broker is a company that buys and sells shares on your behalf. So it can buy shares on your behalf from NSE, or if you want to sell, they're the ones to sell for you. So they connect you to the stock market. So let's say you want to buy shares. As I said, you can't go to NSE. You just go through a broker, either through their platform. You submit the order, it is taken to NSE. It is executed, because there are also other brokers who have submitted the orders there, and you get your shares immediately. So brokers will provide you with a trading platform. These days, if a broker is not giving you access to the app or web portal, trust me, you'll be losing a lot. We are in the digital world where a minute matters a lot. So they will provide you the trading platform. You don't have to go to the broker to initiate an order. They also show you the market prices. They are paid for that at NSE. They get it. They show you these are the prices. Otherwise, you need to buy from NSE. They also help you in buy and sell executions. Remember, at NSE, you cannot trade without a broker. A broker is needed. So at NSE, even if you do what, even if you go at NSE, you need a broker. Even if you go to a custodial environment, that is, you go to a bank and open a custody account, that bank relies with the broker. They set the orders to the broker. So never be right by anyone. You don't need a broker at NSE. In the system at NSE, brokers are the ones who are allowed to trade. They are called trading participants. Then we have CDSE. CDSE is a Central Depository and Settlement Corporation. This is where your shares are stored electronically. We no longer have certificates. Certificates zilikuwa kitambo, they were done away with, and all shares were converted into digital format. If you have a certificate, quickly go to your broker, tell them you want to move them from certificate to digital format. Otherwise, you are just having a paper there. You are not even known anywhere. And this is how people lose their shares, because somebody can make a duplicate of that certificate and transfer to their account. So shares are stored electronically at CDSE. It's like your bank account for shares. So what happens after you buy shares? It's not the broker who keeps your shares. Shares are stored at CDSE. All brokers connect to CDSE to fetch your shares. So CDSE as an entity is the bank for your shares. Brokers are just the tellers, the teller in the bank. If you want to get your shares, they can withdraw for you, that is selling. If you want to deposit, you just buy from NSE, they put them in CDSE accounts. So CDSE and broker are totally different entities. CDSE is just one company. Brokers are many. All of them, they work like tellers or like M-Pesa agents. When you want to withdraw from M-Pesa, you go to the M-Pesa agent. So when you want to withdraw your shares, you go to the broker they sell. If you want to deposit in your M-Pesa, you go to the agent. The same thing. If you want to get shares in your CDSE account, you go to the broker, they buy at NSE, they are deposited in your account. So CDSE is like the M-Pesa itself. It is sits in Safaricom. So CDSE, they have their own premises, different from the broker. So that's where shares sit. So CDSE, think of it like a bank account for shares. It keeps the record of who owns what and how many shares. So CDSE, they don't know you bought at what price. Them, they know Peter owns 100 shares of Safaricom, period. They don't know what price you bought at. The person who knows the price you bought at is the broker or another entity called NSE. This is the market where now shares are bought and sold. Who have, so that they are available in the market for selling. Then the brokers bring in the buyers and sellers. They connect at NSE. So NSE brings in the buyers and sellers. This where now it's a market like Yokomba, where now shares are sold and bought. CDSE, NSE, they don't know your shares. They don't know Peter have how many shares. They only know NSE is trading at this price. They only know Safaricom is trading at this price. So NSE know the prices, not the shares you hold. Again, remember the broker is the one who helped you open the account, so they know the shares you have. Again, the broker is the one connecting to NSE. They know the price. So the broker knows the valuation of your shares. CDSE, they don't know value of your shares. NSE, they don't know value of your shares. Why? One have the shares, one have the price. So the broker comes in, brings them together. That's why you have a portfolio valuation. I hope now you're understanding the connection between broker, NSE, and CDSE. NSE prices and trading, CDSE shares, company, and who owns what. Broker now connects the two, and they're able to tell you own Safaricom, 100 shares from CDSE, at this price from NSE, and current price from NSE is this. You're either in a profit or a loss. So never call CDSE to ask why you're making losses or profits. Never go to NSE and ask them why you're making profit or losses. They don't have that answer. Why am I saying this? I've seen people going to NSE's CEO Twitter complaining about their portfolio performance of their shares. He doesn't know which shares you have. He knows Safaricom was trading at 10, period. If you go to CEO CDSE and you start complaining your shares are various, is what, they tell you, me, I only know you own your hard shares. I don't know what price you bought at. I don't even know what is the current price. But go to a broker. You actually tell you, you bought these shares at a very high price. Market have gone down. And it's because we can see this company is performing this and that. That's why your shares value have gone down. Understanding these entities will help you. You stop complaining to the wrong party. You complain to the right party. So NSE, if you want to buy shares, that's where trading happens. Buyers and sellers match. So NSE will provide price discovery. That is determining the share price. Very early in the morning, 9 to 9:30, you are allowed to place the prices. You place prices. I'll show you with a screen for Safaricom. Prices anyway, in how you feel, as long as you're within the trading limit of 10% from the previous day closing price. But at 9:30, that's when sanity is brought into the market and opening price is set. Any buying price above that price is settled at that price. Any selling price below that price, settled at that price. Then from there, demand and supply. They also provide the main trading platform, not the broker platform. It's called the trader, ATS. That's where now people pump all the orders and start trading. They also create trading rules. One of the trading rules is that my price can never go above 10% opening closing price for the previous day, up or down. So if I'm a seller, I'm not subjected to very low prices. If I'm a buyer, I'm not subjected to very high prices. And also ensuring there is no wiping out of shares, because if then there is no limit to 10% price movement, it means you can buy and sell at any price, meaning even company value can go to a zero price. So for NSE, it is set through 10% through. International markets, however, they have a way of controlling that. There are stocks they will say 5%. The others which they say if prices continue to drop and it drops to a certain price, just hold the trading of that share for some moment before the market stabilizes again. So I hope that is clear. Trading rules 10%. They also say, what if Peter comes and buys and sells to himself? What happens? It is the same price Peter bought and sold to himself. So I'm putting an order to buy at a certain, say 10, and I'm putting, because I already have shares to sell at 10. What if Peter buys and sells to himself? He's the one losing because he's paying commissions both ways, but there is no change in ownership. So they come and say you can't sell to yourself. It's called self-trading. They have put that rule. They also decide, what if broker decides to play with the prices? So they say it's only the system that can match, but not an individual. So all those rules are there. Always read NSE trading rules. Then they come and say, if Peter buys today, he can even sell tomorrow. But then we have not known whether the person he bought from will complain. What if he sells and there is a complaint? How will we reverse this transaction? Let's give it 3 working days. CDSE to wait and see if there is anyone who is complaining. If there is no one, then on 4th working day, it is confirmed. Peter shares, the person who he bought from gets the money. That's why T+3 rule exists. I've seen people even trying to argue, you are reading it from NSE trading rules. When you buy shares today, you can only sell on that day. Then you're arguing, why can't I sell tomorrow? It is clear, T+3. Wait for 3 working days. It is NSE rules, not set by the broker, not set by CDSE. So NSE provides trading rules and everybody has to follow them. You can't, even if you try with any broker to buy shares and sell tomorrow, that's not possible. It's not even practically possible. And if you're able to do that, then you don't own those shares. like ZD. ZD, I know you can even sell tomorrow because that account doesn't have regulations. You are not the owner of shares at CDSC. If you want to know your shareholder at NSE, it's CDSC, you are the one who really owns those shares. If you buy today, try to sell tomorrow, apart from ETFs. If you're able to do that, then you don't own the shares. There's somebody who owns those shares on your behalf. Trading rules apply to everybody connecting at NSE. So think of NSE like a big supermarket which have rules. Of course, you can't just pick anything and walk out. You have to pay. If there is a line, you have to queue. If they are put a limit, you have to go with that limit. But now instead of buying those goods and services within supermarket, here you are buying shares of different companies, which the broker displays to you, and you are able to buy and sell. Then in any market, there must be somebody to see whether you are following the rules that have been set. So in NSE, it is CMA, Capital Markets Authority. It is part of government entity at the Treasury through the Ministry of Finance. Why am I saying this? When you see Ministry of Finance talking, is it Ministry of Finance? Yeah. And Treasury talking about NSE, it is CMA which is talking indirectly. So they are the regulators of stock market. Any product that is not regulated by CMA, then it is very risky. So their role one is protect investor. If you have an issue with a broker, don't go to NSE, don't go to CDSE, don't even go to the registrar. A broker, just go to CMA. They'll actually be looking for you to beg you not to go. Even NSE at one point, they break their own trading rules, CMA is there. CDSE, if they mess with your holdings, CMA is there. But again, it is the role of the broker to manage all those. So if you have an issue in the market and the broker is giving you hard time, CMA. Dividends. If a registrar doesn't pay you, it is your money. You are a shareholder. Go to CMA. Don't go to complain to NSE or CDSE. They will actually laugh at you. But go to CMA. You'll actually be paid very early in the morning before you reach there. Why am I saying this? There are some of registrars who decide to pay as and when they think, and whichever mode they think they pay with. It's because they have never been taken to CMA. Brokers can't take them to CMA at all. Even if you complain a million times to a broker, they can't take the registrar to CMA. They are birds of a feather, and you know they flock together. So why would a broker go to CMA that they are taking their, would call them their counterpart? Because brokers also behave like what would I call them? Like registrars. Have you ever called a broker, then they don't pick, or they pick and slam the phone on you? If that has ever happened, just quickly go to CMA. If a registrar doesn't pay you dividend and you have proof, go to CMA. If they decide not to pay you, they are telling you we sent a check and it is M-Pesa, just go to CMA. Everybody in the market knows the penalty. And that penalty, remember, it is the money. I don't want to give you some insiders here. Let me first see something on the chart. Okay. If you're able to go and prove that you have not received your dividend for over a month, you have even tried to follow up, nobody responds, and you argue that that money you wanted to even put in money market fund and some interest in it, you have lost, trust me, there's somebody who will pay you plus interest called a registrar. If broker doesn't pay you your money, and you're able to go and prove that you had a bill that you're paying, and that you have even lost, even taking other loans to pay, trust me, they will pay you plus interest. And they will pay you even before the case starts. They first pay you before now you start arguing. That's where CMA comes in. Anywhere you're dealing with your money, never even be lenient on anyone. Just go to CMA, argue your case, let it start from there. Broker will actually pay you before they even start asking, who is this? Now, when they are saying you, that's when they are realizing, is this the same client you are talking to on the phone? By that time, they have even lost. Huh? So CMA, they are there to protect you. And also ensure fairness, such that the prices, and that's why they have already asked NSE to have their own surveillance team to check market. They also regulate the brokers and the companies that they are listed, the companies listed. Why? Because the broker is the one who is holding your cash. The companies through the registrar are the ones who hold your dividends. So I've given the example. Hopefully now you don't need to worry about the market. Any headache from a broker, just rush to CMA. So CMA is like a referee. So they ensures everybody follows the rules. Huh? Then you have the listed company, the company you're buying shares from. If it is Safaricom, EABL, BAT, and the others, huh? The shares that are publicly listed and available to the public to buy. So they will sell the shares to you to raise the money. I said that when we started. So during IPO, they're actually telling you, give me your money, I give you ownership of the company. When that company reports profit, they share that in form of dividends. Huh? And they have to report either quarterly, half year, and final results to you as the shareholder. So those are the listed companies, the companies you're buying shares from. But remember, those companies, they can't come in NSE and now start following up. Who have my shares? How dividend will I, how much dividend? When we give bonus, who gets what? They appoint a registrar who keeps the records of the shareholder. So the registrar will know who owns the shares in that company and how many shares. So that when dividends are paid, they are the ones who pay to you. It's not the company, it's not the broker, it's not. If there are additional shares which company have decided, instead of giving cash dividends, they give additional shares. They are the ones who disperse. They add into your CDSE account. If there are rights issue, any existing shareholder is entitled to additional shares at a lower price. They are the ones who handle that. So if you have an issue with dividend, never go to a broker or CDSE or NSE. Go straight to the registrar if you want to be sorted quickly. If you go to a broker, the broker will just take you around, because even if they call registrar, they can't be given this information. It is you as the client. If you go to CDSE, CDSE will take you back to the broker. Broker will send you to the registrar. So save your time. Dividends always start with the registrar. They will tell you where they sent, because it is them who decide where they were. Broker may have given the mobile money, but the registrar just wakes up and decides, let's send that check to the registered address. So when you opened an account, you gave your address. That's where the checks are sent. Huh? They are not sent to any other address. If you gave Nairobi without anything, it will be sent to the postal code. If you give Nairobi 00100, it is sent to GPO. You only need to go there and ask the people who are sitting in the counter. They check for you whether there is a private letter. You only need to give them your ID, they check. If it is there, you'll be given the check. That is, if you didn't give PO Box. If you give PO Box, then it is sent to that postal address. So you must have given either your town plus a postal code, or a full PO Box. If you give a full PO Box, that's why it's sent. If you give a town and postal code, it is sent to that town under that postal code. Postal code denotes the post office. So if it is 0100, it is a GPO. Then the rest, they have their codes. So a registrar, they handle like a class register. They are the ones who know who is in that register. AGMs, they are the ones who will organize and take a register and do all those. But you as the client, you only interact with them in terms of dividends, bonus, and when they are doing rights issue. Though most of those can be handled through the broker apart from dividend. Dividend broker cannot. They will only refer you to the registrar, because even the registrar will be wondering which shares are you talking about. Is it the ones owned through your company or owned through a different broker? That's why you need to go to the registrar, because they have everything. Yeah? So then how does it work? A company lists its shares at NSE through IPO. Then you as the investors will go through the broker you buy. Once you buy, those shares are stored at CDSE. But the registrar keeps the records. So registrar have their records. These are our registrar, these are our shareholder for this company. If there is another company, this is the company, these are the shareholders. Then to protect you, CMA will oversee everything. I hope now it is clear. NSE, it's the market. Company is the product you're buying. Broker is the middleman. CDSE is the storage. Registrar is the record keeper. CMA is the referee. And you are the client. A simple process. I hope now it is clear how NSE works. Huh? So then how do you buy shares? First of all, you need to open a CDSE account. So you start by choosing a broker. Which broker do you want to work with? Do they have a digital platform or not? If they don't have, then you have to go there physically, open account, and you give orders physically. If they have an Apple portal, it either have an online account opening or it doesn't. If it doesn't, then again you need to walk to the broker, open account, start using their digital platform. Or if within the digital platform they have the account opening, you can do it quickly. Then after you get your CDSE number, you deposit money in broker's account, not CDSE or NSE or registrar of the company you're buying from. It is to the broker bank account or M-Pesa account. Then you go to that broker and tell them, this is the proof of my money. I want to buy shares. So they allow you now to place your order. That order is sent to NSE. If there is a seller matching your price, shares moves to you and money moves to the seller. Then shares are sent to your CDSE account. Then the sellers receives money in their broker account. So again, simple, money into broker, then to NSE, shares to CDSE. You own the shares. The person who sold you receives cash. It's just that simple. This is just a simple example. You deposit 10,000 with a broker, instruct them to buy you shares. So when they buy shares, money reduces, but now you have shares. So if you go to a digital platform, I'll show you. In the statement, you see the money deducted. In your portfolio valuation, you see the shares. If you sell, shares are deducted from portfolio valuation, money is added to your statement. If none of that has happened and there is no money in your account or shares, then some ukora imefanyika. That's why you need the statement and portfolio valuation to always track where your money and shares are. And when you become a shareholder, it is you to decide when you want to sell. But do you need to sell? You can hold those shares as long as they're giving you dividend for as long as you want. You can even pass those shares to your beneficiaries. On my YouTube channel, I've done a full video on how to create wealth even for children. Huh? So next Saturday, because Friday will be a working day, next Saturday now we'll come again. Since now we know as a beginners how to do it, to trade, we will come and see how to build wealth at NSE. And all these trainings are free. Yeah? or you can invite as many people to those links I've shared on the chat. Let me share again. One group is already filled. That's why I created another WhatsApp group. They are free. Let them join. Let them come and run. So we come to bonus, dividends, bonuses, splits, and rights issue. Because those are terms you see this year. You won't miss 2 or 3 of these this year. So these are different ways a company rewards or raises money from investors. One of them could be rewarding you, and others could be raising more money from you. And each affects your shares and returns. We'll see each how it works. So you need to understand how this works as an investor if you want to invest at NSE, even in global markets. So how does dividend work? Dividend, we said, company makes profit, pays directly to you. So it's money paid to shareholders from company profits without you selling the shares. You're not selling your shares. So like, let's say you own 1,000 shares. A company says we are giving 1 Kenya shillings per share. Then you receive around, because now you multiply dividend times the number of shares, you receive 1,000. But remember, you have not sold your shares, which could be in a profit or a loss. So they are paid per share. And it could be either once, that is final dividend, or twice, where they pay interim and final. Interim is when they're announcing either half-year results or quarterly results, and final is when they announce final results. They could also have a special dividend. If a company sells or earns from something that is not within their operations, a one-off, they can decide to give you a special dividend. Like when KCB sold NBK, National Bank, they gave a special dividend last year. So when you see a special dividend, know that company have done something extraordinary. They are giving you more money. So then, how do dividend works? The more the number of shares, the higher the dividend income. So you only need to take the dividend per share times the number of shares you have. The more the number of shares, the higher the dividend. That I always say, even if you're buying in small portions, because you're not limited, it is your money that limits you. And we are not all equal. There's somebody who have millions, there's somebody who can afford 100. These two people can build the same portfolio over time. The 1 million can buy and forget. You with 100, you can be buying daily. At one point, you have reached the same level. So never rush into a market to compete within one. Put what you have. Nobody can see what you have. Even the broker, if you're using a digital platform, broker don't see what you have deposited. They don't see what you have bought unless they want to be cheeky and start checking each account. But how many accounts will they check in a day? They have so many accounts trading, they don't have that time. So even if it is 100, put there, buy the shares. Accumulate enough so that if you multiply the number of shares times dividend, you have some good money. Then within dividend, there are key dates you need to understand. One of them is announcement day, is the day the company declares dividend. Like yesterday, Co-op announced their dividend. That is the announcement day when they are declaring dividend. Maybe they're announcing results. Then book closure is the date you need to have shares. At 3 p.m. when market closes, the total number of shares you have is what qualifies, irrespective of the date you bought it. You could have bought many years ago, you could have bought the same day on book closure, but the total you have. There is no criteria. The only criteria is 3 p.m. Which number of shares do you have? 1,000 Co-op. That's what qualifies, irrespective of the price you bought at. Multiply that by the dividend, that's what you receive. Again, book closure is the date you need to have the shares, irrespective of when you bought. You could have even inherited from your parent, but as long as you have held onto those shares, you have never transferred or sold, the total you have that day is what qualifies for dividend. Why am I saying the total? Because most of people go to their statement, you start looking, these shares I bought, Safaricom I bought it, which day? This day, this day, this day, so which qualifies? It's not which day matters. It is the book closure date. 3 p.m. Market have closed. Who have the shares? How many shares? They all qualify. Again, who have the shares? How many shares? They qualify. So brokers mostly update their records maybe in the evening, even the following day. So when they balance their books and you check your portfolio on book closure, the total you have that day is what qualifies. What does that mean? If you sell on book closure, you remove yourself from the register. Remember, I said total at 3 p.m. So if you sell in between, you are removing yourself from the register. Ex-dividend date is the next working day after book closure. That day you can do anything you want. You want to sell, you can sell. You still receive your dividend. That is 1 day after book closure. You can sell if you want to sell, but you still receive your dividend. But again, previously what used to happen ex-dividend, prices would go down with the same price for dividend. But these days, we have seen something different, where prices are going up. On ex-dividend. So company announces dividend, prices go down. Ex-dividend, prices go up. Why? It's very simple. Prices are way too high. Dividends have not increased. And if they have increased, this is with a small margin. What does that mean? Dividend yield is lower than capital gains. So a fund manager, a foreigner, will not chase a dividend yield, they will chase capital gains. So they will sell immediately on result announcement. When prices start to go up all the way to book closure, they will sell to get their capital gains. Then ex-dividend date, because they assume, this is an assumption, ex-dividend date, price goes down. They are shocked these days that prices go up, because it is them who now want to buy, they push the prices up instead of down. So I hope now you understand why the prices are moving the way they are moving. Again, I repeat, company announces a dividend, prices are way too high, so if you are to divide the dividend by the price, like equity 5 bob divided by 70 times 100, that's around 5 over 70 times 100, 500 divided by, I'm doing which mathematics, 5 over 70, we are just using an example here, times 100, so it is 50 divided by 7, nilianguka mahesabu, so it comes to around 7%. And your gains, if you have to do, you have to go to portfolio valuation, you check the profit percentage is 50%. Which would you go for? 7% or 50? That's a fund manager. I'm not talking about you as a client. I'm talking about the fund manager, because they also have their portfolio valuation. They have to give you returns in the funds you have invested, equity funds. So for foreign investors in all funds, they compare dividend yield against capital gains. Whichever is higher that month, they take quickly, wait for the prices to go down, re-enter again, and use the same cycle. But you as an investor, do you want to play that game? Never ever even try that game. Foreign and funds, if prices continue to go up, they don't return to that share. They even go to another product quickly and forget there was NSE. And you? So don't sell because others are selling. Don't panic because prices are going down. First, understand the reason why prices are going down. Once you understand that, it becomes very easy. I hope it is clear by now. That what you are seeing in the market is just purely dividend yield against capital gains. Foreigners and fund managers. Don't play into that game. Why? Immediately you sell, you just remove yourself from the register. When will you get back? prices will continue going up. So don't sell because others are selling. Don't buy because others are buying. Buy because you know the prices are good for long term, and sell because you want those gains. Otherwise, remember this company will give dividend next year but one. Those are gains you're getting. If you are to factor them in, you'll actually realize you are at a very high profit. So don't race with others. You just leave them. Let them race with the market. So when you see shares prices going down, don't sell because others are selling, and don't panic. Actually, that is the time to buy. Then there is a payment date. That is the day now you receive the money in your bank account. Factor 1 week goes. There is a very huge risk of payment the registrar have to deal with, and until they clear all those, it's unlikely you find them failing to pay you. They will eventually pay you. If they don't pay you, then there is an issue with the payment mode that you give. So always factor that out. Either you give a wrong payment mode, or there is a problem with your bank. There are also others who decide they will not pay through the mode you have selected. It's their own dividend policy. But that does not mean they are not supposed to pay you. They should pay you. And that's where now CMA comes in. So a simple rule, if you want to get the dividend, just buy before or on book closure. But remember, on book closure, prices are usually high. So you get your dividend. If you buy after, then you miss. If you sell before book closure, then you miss. If you sell after book closure, you get. I'll come to dividend calculator. Let's first go to bonus shares. So a company makes profit. They decide to share that instead of cash. They share that in form of extra shares at no cost to you. So if you have like 1,000 shares, they decide bonus is 1 for 1. That means for every one share you own, you get another additional share. So if you have 1,000, then you get another 1,000. So in total, then it becomes around 2,000 shares. But then you find in most cases, because the people who are buying shares after bonus closes, bonus date, they are not entitled to the bonus. Price will adjust downward. Like what happened with Williamson Tea. Prices are adjusted downward because of bonus dilution. It is usually called by bonus dilution. This makes sure the value remains the same. So if you have to multiply the new number of shares times the price, the valuation doesn't change at all. So your valuation remains the same. So those are bonus shares. I'm just checking Q&A just to make sure there is no question on bonus. So for bonus shares, valuation must remain the same. That's why the price goes down, but the number of shares go up. Then there is something that is usually confused between the bonus and share split. Share split is a price adjustment. Remember, bonus is free shares. So share split is where prices go down at a ratio, but the number of shares go up with the same ratio. Remember, for bonus, price doesn't go with the same ratio. It depends on the market. For bonus. For split, if the price is going down by 3, You divide the price by 3, you multiply shares by 3. It is exact. The share valuation remains exactly the way it was before. So if the share price is 100 and a share split is 1 for 2, it means you are dividing the price by 2, goes to 50, but your shares double. Valuation doesn't change at all. So the number of shares will increase, but price reduces with the same ratio, and value stays the same. That is share split. So the difference between the two, bonus is a reward. You are getting free shares. Split is where shares are made more affordable. So I hope now I've answered the question. Why split? Making shares affordable. Right now, prices are way too high. So then how do the companies make shares affordable to everyone? Shut the prices down. Equity Bank have been doing this before. They have done it. Hopefully this year, you maybe going forward, you start seeing the same happening. So both will increase the number of shares, but the value of the shares doesn't change immediately. Yeah, because now it depends on the market forces. So we come to rights issue. Rights issue is a company rewards the existing shareholders by giving more additional shares at a discount. So company wants more money. They want to raise from the existing shareholders. So what they say, let's give you additional shares, but for these shares, you actually pay less. You can decide either to take the shares or not. It is you to make decision. So if you own 1,000, and they say for every one share you are entitled to 2 more at 20, you can come and buy. So you get additional shares, around 500 more shares now at 20. You are not buying at current high prices. Then the reason why they do this is to raise money from the investors, maybe pay a debt. And remember, these companies are already listed. So also to grow their business without incurring additional debts. So they are borrowing from you by giving you additional shares at a lower price. A minute. So then what can you do in a rights issue? You have choices to make, 3 choices. Either you buy the shares, the rights shares at a discount, you pay for them, or you can ignore and decide not to do anything. There is no penalty, but your number of shares remains the same. Or you can decide to denounce, you sell them. They are tradable. You can sell them in the market. Somebody else to take over. So it is you to decide. Remember, when you ignore and do nothing, you lose. So it's always good. Either you take the rights or you sell them off to the market. Then how does it affect your investment? Dividend, it is free cash you are receiving. Bonus, you get more shares. Split, price becomes cheaper. Sure, your shares go up. Rights issue, you buy more shares at a lower price. So I hope now you have seen different ways now you can grow your wealth. A share that is giving dividend is free cash. If it gives bonuses, you're getting additional shares. When prices go up, you're in a profit. Splits, price goes down, shares multiply, but when prices go up again, you're in a profit. Remember, shares are multiplied. Then rights, so you're buying additional shares at a cheap price. So just a simple way to always remember, dividend you're earning, bonus you're gaining more shares, price splits, price are just downward. So if it goes up, you're in a profit. Rights, opportunity to invest more at a lower price. Let me show you now the dividend calculator so that we see some of these things. Let me just open. It is on my blog. Let me share this. so that if you're looking for dividends, you have an easier way of accessing that list without struggling. Yeah, that. So this is my blog. It has a calculator. It has the latest dividends. Let me see if I can copy this. Move that. Let me copy this and drop it on the chat. So that is the link to the calculator. If you scroll down, it has upcoming dividends. You just wait for it to load. You can work on it with your Kenyan or a foreign investor. You have a selection to make. Let me see if I can share. I know it doesn't show the drop down. Let me see if I can share the full screen. Let me share the entire screen so that you can see it. Hopefully you can see that. So on the investor type, you can decide to select a Kenyan or a foreigner so that you see the tax you pay. For us, most of us, we are Kenyan. Then you select a stock. It has the current dividends, including those which have already closed but are waiting for payment. Like if I take BAT and maybe I have 100 shares and I click calculate, it gives me a breakdown of what I will receive. It tells me the dividend 60 shillings per share. Book closure is 8th May, so this is the date I need to have the shares, and I'll receive my payment on 12th June. Then the amount that I'll receive, the net amount that I can receive, and the tax that will be paid. It's not me who is paying. If you scroll down, then it has the lists. Like now, let's say if I picked a different share, like the ones which have closed, let's see whether it can propose. All these, I think, book closure after. Let me see, KPLC book closed. Does it have anything? No. EABL. Because any share that has a payment day earlier than another book closure is supposed to give you possible investment option where you can reinvest that dividend. Only that when these shares, the ones which have closed the books, I think the payment is way after. So there is no reinvestment. But down there now you have the list of the active dividends. And dividend amount, the time it was announced, book closure, and the payment day. Then below that you have another investment calculator, again with the same settings, but this one now can help you, like if you're buying BAT and you want to put 100,000 and maybe you want to know the number of shares, current shares, maybe you don't have 0. If you calculate, it can tell you the number of shares you can easily buy. So it tells you the shares infinite, I think it's cause of 1,000. I need to update the price of BAT, but it calculates everything for you. If let's say I have 100 shares, it will actually give me additional details. I think it's cause of so it gives you a breakdown now of the shares that you can hold and their dividend. But I'll check the pricing. I'm very sure I've not put BAT price. So it has the active dividends. You can easily calculate. And below that, it gives you now the dividends which have already closed and the date they will pay. So we go up here. So like BAT, it was announced on 27th February. Book closure is 8th May. So on 8th May, you need to have BAT. The total you have for BAT on 8th May is what qualifies for dividend. And you'll be paid now on 12th June. I hope now it is clear, those terminologies on dividend. Let's go back to the presentation. If you have anything on that calculator, remember there is those WhatsApp group where we can always discuss. So let's go to the next slide. Market depth and price selection. So market depth will show you the buyers and sellers at different prices. That is demand and supply. And it helps you decide when and at what price to buy or sell. So market depth is the most important as a beginner. I'll I'll show you in the next screenshot, because now market is closed today, we can't see the real prices. And this is where the real trading decisions happen, on market depth. Market depth is where you need to see the prices. I'll show you how you can get it on the app and also on the online portal. So it has buyers on one side, the people who are buying, and sellers on one side, the people who are selling. And remember, in the market at NSE, it is usually a battle. If you have more buyers than sellers, price will go up. More sellers than the buyers, price will go down. But depending also on the quantities that are in the market. So a good example of market depth on the online app, for most of the brokers who have a similar app like AIB Digitrader, it looks on like what is on the left. Online portal looks like what is on the right. So you have the bid and ask on the app. On the portal, you have the bid and offer. So bid are the people who are buying. Offer or ask are the people who are selling with different prices. Then on the online portal, you have also advantage of the graph. I will use the online portal side to explain, because for Safaricom screen, you can see prices are jumbled up. This is early in the morning. That's when you see prices all over. So we use the BAT, the one on the right side. Like now, if you're buying BAT using this screen, you find the demand on the highest price of 563 is way high, around 1,000 shares. If you multiply by 563, is around 563,000 in terms of cash, because it is quantity times the price. If you go to the offer side, it's 999 against 564. Looks like the turnover is quantity times price for each is nearly equal, 500,000. What does that mean? This is a stable market at that day. Prices may not fluctuate that much. But what if we had 2 shares at the top, another 3 on the bid side? It means bid is weak. Prices may go down. The same as supply. So that's how you interpret this screen. Where there is a huge quantity, you want to be either slightly above that quantity or higher than need if you want the shares immediately as a beginner. As an advanced, we have talked about GTD, where you can place any price using your own analysis. You can determine the right price to put the price at. We will come to that. Let me first go through these slides. So a good example, let's say at price of 20, that's where the high demand is, and the sellers at 21. Price would likely move towards the where the pressure is strong. Remember, bid, if you have the highest quantity at around 20, it means before you clear that quantity, it will take time. And there are also other people who are placing market orders. They will start clearing the sell side upward. So the way the market depth look like what we have seen, on the bid side, you have prices from highest downward and quantities, that's the demand side. On the offer side, you have the lowest price on the sell side going all the way down to the highest price, and quantities also on the quantity side. So it's either offer, ask, or sell side. It's also supply. So these two screens will help you know where demand is strong and where supply is heavy. Why? Where there is a huge quantity on the demand side, that's where demand is concentrated. Where there is huge quantity on sell side, that's where supply is concentrated. You don't want to go below those prices, because definitely it will take time to get shares. So then how do you read demand and supply? As I have said, high quantities on demand side, that's where there is a strong demand. Before you break that demand, it may take somewhere. So prices may not go down below that price. So you do want to place your order above that price or the highest price possible. Or you match the supply side. Like in this side, in this screen, If I wanted to buy BAT immediately, I can put off price of 564. I'll get the shares immediately. If I put 563, I have to wait for that 1,000 to clear. If I put lowest 559, it means I have to wait for all the prices above me to clear and their corresponding quantities. That's where now watch list comes in for the online. I'll log in. It has additional details to see how many number of shares are clearing, so that you know whether the prices can go the same day. Otherwise, you have to use GTD orders. Good till date. So where there is a strong demand, it is usually the support level. Prices may not fall below that. If you are able to identify that, I will come to it next Saturday. Then in terms of supply side, where there is strong supply, that is where there is resistance. Prices may not rise above it. Why am I saying this? Safaricom, you already know who is controlling the price. They have already put a big quantity on supply side, prices creating a resistance, and also placed another buy order below a certain price so that prices don't fall. It's called support. So once you understand that, now you know how the prices behave. Then how do you pick your entry price? If you're buying, don't just buy at any price. Look for strong buyers below the current price and weak sellers above. Let's go to the same screen here. Like here, if you look at the bid side on the BAT screen, the one that has a graph, we have 563. There's already a very huge quantity. This is the support level. Prices may not go down. If you put 562, you have to wait for the prices to come down. If you look at the supply side again, support is around, resistance is around 565. There is 9,000. Meaning prices may not go above that. So the likely scenario is, if I wanted to buy, I would either use 563 and wait for the 1,000, or put 564 and get my shares immediately. However, if I am a patient investor, there is nothing that stops me from putting any other price up to 560, because that's where there is the next biggest quantity. Why? 1,000, there are two splits, or meaning it's only two people, two orders. 34 means these are 34 orders which have to be cleared. So if I put the price lower than that, chances of getting there minimal. Remember, these two orders, somebody can decide to cancel or even amend the price. So that's how you start reading your market depth and pick a price. And that's where now the range comes in. If you have noticed, when you ask me what price do I put, I usually give you a range. Like here, if you had to ask me BAT, I would tell you between 561 and 563, because I don't want you to buy a 564, because you get the shares immediately and pay a higher price. But within that price of 561, 563, GTD you can get. So as a beginner, never chase prices. If people are chasing prices, you don't chase. Buy near support where there are many buyers just above it, slightly above it. If prices are falling, I've said this, please wait. Don't be in a hurry. Put up the lowest price possible. Wait for the prices to come for you. If prices starts to pull back, you realize they were going down, but then there are orders that have started to come up above your price. Now enter at that price, buy and forget even if price goes down. Because again, you may wait, continue adjusting down, then you are left to buy the trends, prices shoot up. Beginner mistakes, you always want to buy when prices are already too high. I've talked about BAT. Prices are going down right now, and I've explained why, because of dividend yield. Then there is ABSA. I know most of us, we are waiting for it to go up. Once it goes up, that's when we want to enter. You will not have entry points. You'll be struggling to get at high prices. Safaricom, it's already discounted. Actually, you only have the next 3 weeks. The deal was confirmed 1st of April, if nothing changes. Then after that, there will be no that support or resistance. Prices will start going up. And we as the Kenyans, we now want to enter when prices have started going up. don't wait for that to happen, because now you'll be buying at 40s, 50s. While now people who bought currently will be selling to you. So always be patient, watch for buy side, sell side, and enter at strategic prices. So this is just a summary as we come now to the online portal. Then we go through a few slides, then we call it a day. So market ni kama soko. If you have many people who want to buy tomatoes, the price always goes up. If you have many sellers selling, they flood the market, price goes down. So let's log into I'll start with the online portal, then we come to the app. Quickly, we are not placing the order because the market is closed, but I'll just go briefly through those screens. So let me open online portal. Hopefully I can easily connect. So I'm just connecting. I have to connect my VPN first, but you don't need VPN. For me, I need VPN because of my internet provider. For you don't need VPN to connect to the broker platform unless you have been using VPN before. Then that means the service provider may have blocked you. Or maybe your office internet has blocked you. So I want to get this screen. So once you understand how to place the order, that's it. The next thing is now to know how to build your wealth, both for you and for your generation, that is for your kids. And there's always one question you need to ask yourself. Are you getting to NSC as a betting or you're building wealth? If you're getting in to make money, that is betting, always be ready to lose. If you're getting into save or create long-term wealth, then you have an easier way in the market. So on the online portal, you have the two screens where I'm hovering over. That is a screenshot I've taken for ABSA. So you have the market depth, but right now it is empty because the market is closed. Then you have the graph. So as I was saying, if you want to make informed decision, then you use the watch list. The screen on the left, the one that have a lot of shares and it has greens and lights. You only need to scroll to the right to see the foreign buys and sells. I'll come to this next weekend. And this helps you to know whether foreigners are buying or selling, so that you make decisions based on the quantities you can see foreigners executing. You can tell from the market depth whether there is any quantity that is blocked. Like now you can see there are shares which have traded even 46 million, 35 million, but you never see it on the market depth. So that's why market depth is important to show you, not market worth, that is watch list, to show you whether the activity is happening. Then there is a column for last quantity, last price. It shows you what executed a few minutes ago. And you can marry that with the RTT, that is the last time. So basically, the online portal, using the market watch, my watch list, you can tell whether there is a quantity that is blocking the prices from going down. I believe I can do a training within the day when the market is open so that I can explain all these with real data. Let's go back to the presentation. I'll come to this at the end because I can see there is some latency on my end. Let's just go to the presentation. We first go through the theory, then we come to Q&A. I believe at that point I may be able to, if we are not able to type on the chat, I can unmute all of you, but then we have at least some control in terms of asking questions. So as a beginner, always try to avoid chasing others. Watch both buy side and sell side to make decision. and also enter at strategic prices. Don't try to enter at the current price when the market are going down. If it is going up, don't use the prices. Try to use GTD. I did a full training, but next time I should be going through it again. So we come to portfolio valuation. This is the most important screen. When you buy shares, we said money moves to CDSE, but shares, when you buy shares, money moves to the person who have sold to you, and shares moves from them to you. So that happens at CDSE level. So shares move from the seller's account to the buyer's account. But remember, money is with the broker. So when you buy, the broker now takes that money to CDSE. CDSE pays the broker who have sold to you to pay the client. So that's how the money revolves. From the broker who have bought to CDSE, CDSE pays the broker who have sold to pay the client. Then shares automatically moves from the seller to the buyer, and the broker who is buying now is able to show that those shares in portfolio valuation. I'm logging into the online portal, and I would request if you're in the meeting, don't call because you terminate the connection. So your portfolio have the shares you own. It also have the current worth of the shares. Remember what he said, NSE gives the price, CDSE gives the shares. Broker combines the two to give you the valuation. It tells you how much you have invested, how much you are worth at that day based on the shares you have and current price. It also gives you how much profit or loss based on the price you bought at. So market value again is the cost. Cost is the amount you have used to invest. So when you buy shares, there is that amount you are paying for shares plus levies and brokerage. So if you go to portfolio valuation, average price includes the cost. It is not the price you have bought at. It is the price you have bought at plus levy and brokerage commission per share. If you want to see the exact price you have bought at, you go to the statement. I'll show you. Let me first go through the theory, then we come to the whole platform. Then market value is the current value based on that day's price. Like now, if you have to check my portfolio, it will be based on yesterday's closing price. And the loss that you see in your portfolio is not the real loss. You only realize this loss when you sell, when you actually do the actual sale. The profit that you have there, if you want to realize it, you have to sell. Otherwise, it is not real profit or loss. Remember, when you're in loss, it means the market is going down. Price will recover at one point, go up, you'll be in a profit. So why do you need then to why do your portfolio keeps on changing? Remember, it will show you today it's a profit, tomorrow it's a loss, the following day it is flat, nothing, no profit, no loss. It's because share price keeps on changing daily. Market value, current value keeps on changing. Current price keeps on changing, meaning your portfolio value moves with the market price. So today it will be in a profit, tomorrow at a loss, the following day profit, at one point very huge profit. That is normal market behavior based on price movement. What does that mean? When prices go down, that may be the time to add more. So when do you add more shares in your portfolio? When price drops, but company is still fundamentally strong. Look at Safaricom, prices are going down. But what is the operations of Safaricom? It is still strong. M-Pesa is still working. Meaning what? This is the time to add more. And you only have, as I have said, duration between now and 1st of April. After that, prices will start going up. You know, you start chasing prices. Look at BAT. Yes, prices dropped on this week. And it has nothing to do with BAT company. Yes, they changed the management and everything. But look at who is selling. It's the people who bought these shares at low prices. They are just comparing dividend against capital gains. They decide, let's take capital gains. They come and wipe the supply side. But once they sell, we are left. Prices will start going up. So when the prices drop, that is the time you need to buy even more. Average your shares down. So when the prices go down, you are buying at a better price, lower price. And when market eventually turns and starts to show strong demand, then the prices will start going up. A good example, you bought at 20, price drops to 18. This company is still strong. You can buy more at 18. You're actually lowering your average cost. A good example of DCA, here it is, averaging down. It's buying more shares at lower prices. So you bought maybe at 20,000. You buy another 1,000 at 18, that is 18,000. The total comes to 38,000. You have how many shares? 2,000. If you divide now the total cost divided by the total number of shares, your average cost moves from 20 to 19. This is just a pure example of how you can average your costs down. And when you reduce your costs down, when prices go up, remember now you'll be in a profit position. So never panic when prices go down. You only need to add more, but then it's not every time you add more. If company performance is poor, it means the price is dropping because of company performance. It may never recover. If it is bad news, a company have announced maybe they are closing some of the branches, they are left with one. That's bad news. If a company is strongly bearish, that is prices are dropping quickly. That's the time you just hold, wait for the prices to stabilize at the bottom, buy more. So don't just buy because prices are going down. Huh? Wait until prices stabilize, that time you can buy. A good example in the market, you have Captoro prices are going up. We have Williamson Tea. They announced a profit warning, prices started to drop. Profit warning, what it says, our profit will drop by a significant margin. We may not be able to give a higher dividend next time. It doesn't mean they won't give dividend. It doesn't mean they're in a loss. They only say our profits have declined. So expect us either we don't give a bonus or we give a lower dividend. It's just that simple. Same thing with Stanchart. They announced a profit warning. And what they said, we will give a lower dividend. Didn't they give a lower dividend? But then it didn't mean they are not making money, they are not making profits. But why? Stanchart, they were affected by the case they had for pension with their former staff. They had to pay. They pay from where? Their cash flow. That cash flow is the same one they are using to pay dividend. But that does not mean Stanchart price performance has dropped. It has not changed. So you only stop adding if company performance is very poor or prices are falling because of bad news. Maybe they have even been given warning by CMA. That time you don't even try to add. Prices are strongly bearish. That is, prices are dropping very fast. You don't want to buy at high price. You wait at the low levels. So think of it like when you're buying land. When value increases, you're in a profit. When value drops, you're in a temporary loss. It doesn't mean the RAD have changed. It's the value that have changed. If the area is still growing, then it means at one point, the value of the RAD will go up. Maybe it was maybe a valuation error, a valuation issue, maybe other issues that are coming in. And that is a good chance for you to even buy more RAD. Instead of selling your RAD at a loss, you even buy more so that when price goes up, you can sell at a profit. Very simple. When prices drop in the market, don't panic. Even if you bought at a high price, buy now at a lower price. Average your costs down. Let's come now to the platform, then we come to Q&A. So we are going through the Q&A. I hope the questions, it looks like the Q&A is frozen. Let me see if I can get Q&A. Looks like it is frozen. I don't know why. Because I only have 2 questions. It seems like buying shares is buying part of a cow that produces milk. EFT is buying part of the milk processing factory. Yeah, good analogy. Please compare broker versus ZD. ZD is a product of VIB. It's only that it was hijacked along the way. That's why I don't talk so much about ZD, especially on the negative side, because because actually I'll be talking negative about Peter because I was part of the project. But broker platforms, you own the shares as yourself. When you buy shares through ZD, you own the shares. When you buy through broker, sorry, you own the shares because you have your CDSE account. When you buy through ZD, it is Safaricom who owns them at CDSE, but at Safaricom level, they allocate you as a beneficiary. So at the broker level, you own at CDSE, you are the shareholder. You can pass that to your children as well. In ZD, you can't unfortunately pass to your children. They only passed through if you pass over the M-Pesa number, because it is linked to your M-Pesa number. The other downside of ZD is that you can't transfer. If you have any issue with ZD, the only thing you can do is to sell. If you are trading with broker, EIB wakikupatia shida, you can easily move to another broker very easily, quickly, and switch the broker. In terms of statements, broker side, you have two statements, and it is you to decide what to do. On ZD, unfortunately, you can't get CDS statement. In terms of corporate actions, if you have an issue with dividends, broker, you can easily talk to registrar, they pay you. ZD, you have to look for Safaricom. I don't know how. Unless your number is whitelisted, getting into Safaricom customer care, unless you walk to their customer care. And most likely they will send you to the broker. The broker who may not know how the platform works. A recap of 10% in buying and selling. The market is protected because of prices. CMA have put a markup. The highest the price can go and the lowest the price can go. What that means is the prices at NSE have the highest price they can go to avoid company valuation overspeeding and making NSE overvalued. Also, the lowest it can go 10% to avoid the prices from speeding down, wiping out your entire investment. That's why there is that 10% rule. It prevents the prices from going way up or way down. Another question, I know one can only have one CDSE account. Can one have two brokers? You can actually even have two CDSE accounts. You have a passport, one with ID, one with passport. In terms of trading with multiple brokers, you can trade even with all brokers in the market using the same CDS. You just go to the broker they pull, but each broker now will only see the shares you have bought with them. They can't see the other brokers' shares. Then if you want to see them on one broker platform, you can transfer. The only disadvantage is you are exposed to so many changes in terms of cost. Brokerage cost is not the same. It's only easily. I can only advise you to have two brokers if you want one broker for long term and the other one for speculation. But it's not advisable. Let me see if I can allow microphone, because it looks like the chat is not working. I believe there could have been an issue with our, that is our Office 365. Let me see if I can allow. I think I've allowed. I don't know how we will do it. Let me see if it takes effect. Maybe what we can do, you can lift the HUD. I can unmute you. Can allow to unmute just to control the traffic. But I'll check next time this should not happen, because I've seen it has disorganized everything. And I think there are those who also missed to join. But I will see from the chat, from our group, I will see whether we can repeat this together with the international stocks tomorrow. I work out on some of those few issues that have come up. You can lift your hand if you want to unmute if you have a question. If you have a question or you had put on the chat and I have not read, because I can see the chat is a bit frozen. You can just lift your hand if you want to ask a question. Trying to see if I can unmute all of you. Allow mic. I've allowed microphone. Just unmute and we go slowly. Yeah? We start with Michael. You can unmute.
Can you hear me?
Yeah, I can hear you.
Thank you for the sharing. It is very, very incredible. And my question is, who pays the broker and at what average rate? Thank you.
In terms of paying the broker, when you buy shares, when you're buying shares, there is that commission we charge. It actually comes from you as the client. Let me see if I can log in so that I explain that in practice. Hopefully it doesn't drop me. Yeah, let me log in. Let me share this screen so that you see how the charges are deducted. Share that, share. So now if I click on the buy button here, and maybe I say I want to buy 1,000 shares of Absa at say 30, I can use a price of 30. Then I click buy. There is this brokerage charge. That's what you pay to the broker. So you as a client is the one who is paying the broker. So the way it works when you buy, like if I confirm this and it executes from your 30,000, these 30,000 will pay the person who have sold the shares intact, the 30,000. Then the brokerage charge is debited from the extra money you have in the account and posted on the broker account. Then statutory charges the broker will deduct and pay CDSC. Ideally, if you are buying shares worth 30,000, you need to have 30,000 and around 200. 200 pays broker, pays CDSC, CMA, NSC, and any other party that is paid with that amount. Because there is a CMA, CDSC, NSC levies paid to them, broker commission. Then there is investor protection funds, which are set separate by CDSC and NSC to protect the market. Hopefully I've answered your question. Michael, confirm?
Very, very well. Very well. Thank you so much.
Okay. Any other question? You can raise the hand. It's time for Q&A. You can lower the hand, Michael. Mark, you can unmute.
Okay, thank you. There are some rumors that some petrol stations are doing fuel rationing.
Okay.
Is that likely to affect the market, especially for KPC? Thank you.
Right now, I don't think it will affect the market. What will affect the market is because, they are not able to get the oil from Iran and Middle East, the countries that produce oil because of the war that is going. That may affect the supply of fuel in Kenya, meaning KPC profits may go down. Also, Total Kenya, because they are also in the market, may also go down in terms of profitability. But remember, KPC, being a government entity, they usually have surplus or buffer oil, which can cater for the duration, for some duration before the issues that are there stabilize. There are also other rumors that for you to get the oil in Middle East, you have to pay using Chinese yen instead of dollar. So I believe that have resulted in may resolve some of the issues. It may not affect NSE directly, but may affect the company performance. So at the end of the year, you may see KPC and also Total Kenya maybe announcing as reduced profit, or they may announce an increase in profit, because remember what they are supplying right now at high price is the surplus. It's not what they are importing. So basically, whatever oil they had imported earlier at a lower price, they are selling to us at a higher price. So in terms of effect on the prices, now, no. But in terms of profitability for the company, KPC, yes. Total Kenya, I don't think there is any other that may be affected directly, meaning their profits may be lower. Hopefully government doesn't take advantage and lower the dividends that time for KPC IPO, for KPC as a company. Michael, you can ask, just unmute. There is Jihis. I can see you have unmuted. You can ask your question. Let me see if on the chat there is anything. There is nothing. Let me see if I can enable Q&A. Because I don't want you to go with the questions. Huh? Is it possible to, because I know most of us may not be comfortable unmuting. If you have a question, you can just unmute. Huh? There is no harm. Just unmute and ask.
Yes, I'm asking which MMF can you recommend? Maybe best of 3. Thank you.
That is money market fund. Huh? Michael?
Yes.
Okay, in terms of money market fund, there are two types. There is one special funds, like Akina Mansa, Avocap, and a few others, which have come up, which they are giving very high returns. Those ones you may need, they are good, but you may need to check where they invest the funds in. In terms of the pure money market fund, always go with the one that has a backing of insurance. There is Akina Britam, CIC, Aporo. In terms of special ones, there is Mansa X. Mansa X has been there for some time. It is run by SIB, so it's a safe product. But again, have a contact person. Always have a contact person, because when you need money, that's when you need them. Most of them, they don't have an app or a portal for one reason. Some of these things they do off the system. They are managed off the system. They only upload the net asset value at the end of the day. That's when now you are able to see the accruing interest. So some of the funds that I can advise is Mansa, of course. There is Oakford that was started by Faida. Then you have Oakford. Those are special funds. Then in terms of the others, then you can go with Britam. Britam, they have a good money market fund. And Britam is a strong company. Then also Jubilee, if you can get into their money market fund. The reason why I'm giving those two, they are backed up by an insurance company, a strong insurance company. In case of anything, they can always pay you your money. So for money market fund, always check whether there is an insurance company behind it. If there is no insurance company, check if there is a broker behind it who is regulated by CMA. So Mansa, Oakford, those they are purely from investment bank. That is Faida Investment Bank and Standard Investment Bank. Those are regulated by CMA. Britam already, they are regulated by Britam, by insurance regulators. So, and they also have a backing of insurance company, and also the fund is regulated by CMA. I hope I've answered your question. But again, don't chase for returns. Don't go for returns before you know what they are doing. You saw what happened with Cyton. Their special fund, the one that invested in real estate. You don't want to get yourself into such products where you are locked into dispute. Always check, where are these people investing my money in? If they have not declared where they invest in, you can always do a background check. Oakford, Mansa, they invest in international markets and also commercial papers in Kenya. Britam money market fund, some of them they go to NSE, others in international markets, and also commercial lending. Any other question? You can unmute. Let me see if I can get. I'm trying to. Okay, continue. Is somebody who have unmuted? Ian?
Hello, niaje?
Mzuri.
mine is on the banking sector.
Okay.
For example, DK its market capitalization is 43.48 billion.
Yeah.
And outstanding shares is 279.0 million. When you divide those two, it gives you a value of 0.145. But when
Okay.
you take, for example, Equity Bank,
Mhm.
when you divide the market capitalization and outstanding shares, you get the current price, which is 76.
Okay.
But on the DTK Bank and the Chartered Bank, you get an average of 0.7. Does it mean both banks are undervalued, or what does it mean?
Okay, in terms of valuation in companies, you need to differentiate two things. Market valuation, that is NSE valuation, versus the actual
Yes.
company valuation. Remember, there are shares which are not listed in NSE. There are shares which are not listed at NSE. I think most of the companies, because of the majority shareholders. So when you're doing valuation, always compare the actual company valuation against its books, not market capitalization at NSE. NSE, you are only dealing with the shares that are trading and the price movement. What that means, most of the banks, actually most of the stocks in NSE, they are still undervalued.
Yes.
If you are to take now the company valuation using their books. So when you're buying shares, and I think NSE, this is where it deviates from international markets. NSE, in terms of valuation, if you are to compare the valuation based on the books against the NSE, you'll actually be forced to buy shares because it looks like they are undervalued. But in terms of performance in the market, it is demand and supply. So what you do, I think NSE, they stopped giving stockanalysis.com their data, their delayed data, and I'm still following up with their team because that graph can show you the performance. You check the performance of a company historically, how it has performed. Then you can determine the price that is trading right now, is it at its highest? What are the chances of it going higher than that? Hope I've answered the question. So don't look at the valuation, because valuation, if you are trying to look at their books, you are also including the shares that are not trading in NSE. So you'll be comparing shares that are trading in NSE against the total valuation, including the shares that are not in NSE.
Okay.
Yeah.
Okay, answered.
Okay. There is 742 347. You can unmute. I'm not sure. I can't see the name. Let me actually, can I unmute? If you have raised your hand, just unmute. Ian, maybe you can lower your hand so that Ted, you can ask the question.
Okay, Peter, thank you for the session. It's usually quite informative and well thought through. Mine is in regards to the direction that the market will take, comparing it, let's say, from where it was last year and how we've seen it become bullish from last year. Now that we are about to enter, in fact, we are almost inside, let's say, the campaign heading to next year's general election. Is it likely we'll see a bearish movement, whereby then we can now leverage on that as, let's say, investors in terms of shares?
Okay, let me start with election period. I don't think there will be that huge effect on market. Brokers and CDSC, they have access to the systems offline. They can easily work from home. As an investor, you have access to online trading and mobile app, meaning trading will still continue because that's what used to affect the market previously. That's why the market used to drop. In terms of the market where it is and where it might go, the share prices are way too high, most of them. And what you would expect to see next, either if you don't see share split or bonuses being given, Bonuses, they are highly unlikely because companies are not making that huge profit. So you may start seeing either share split. If that happens, then the prices will go down, but your shares are multiplied, your valuation doesn't change. Otherwise, what we may see is a price fluctuation. We usually call it sideways, where price at one point goes up, then goes down, up, down, up, down. So that time now it opens a floor for day traders to play with the market. But I don't anticipate a scenario where prices may drop way down. I think what I've seen so far, foreigners are coming in through MSCI Frontier Index. What that means, the shares that are tracked within those index, foreigners have to invest in. And when they are doing their own index, like I said, index balancing, if a share is not performing, then they remove it. NSE would not want their shares to be removed from those indexes. So they make sure the market performs very well. So you see the prices fluctuate as foreigners come in and others get out. So they usually buy and sell. Elections, I think from what we are currently seeing, we are seeing a scenario where you may have some instability at some point based on the pronouncement we are seeing from opposition and also government itself, which is very unfortunate. If Didi Nyoro plays the same game, expect the market to be affected because he's like the contact person of NSE in the politics. Any negative pronouncement from him will affect the market. Any positive pronouncement from him will definitely affect the market the positive way. So that's the only person I would be worried if he gets into those cheeky politics. For the others, they are just talking. And I don't see anyone who have the muscle we had with the time of Baba. Baba used to affect the market because once he says we close, we close. Once he says boycott, we boycott. That means we are affecting the company, we are affecting the NSE. Right now, I don't see anything that can potentially affect the NSE. There are shares that prices will continue going up. But as I've said, previously we have seen Equity Bank do a share split. There are also other companies which have done share split before. And the reason why they usually do that is to make sure their shares are can be afforded by anyone. No? So you may start seeing now share split coming back in NSE. That's what I foresee in the next few years. Because the market can't sustain those high prices unless we get new listings. Like now we have KPC IPO, which just concluded. We expect Family Bank between now April to some way June, July there. Around that time, they will come in. And I believe government could also be looking at other entities which they can list in the market. NSE, they have already introduced dollar-denominated assets. This is something new. Now you see a completely new NSE. What that means, it allows even international companies to list at NSE and trade in dollars. Ideally opening international markets to NSE. It may take some while. Hopefully NSE's vision is to bring international market into Kenya. So that opens you now to start trading in dollars. Apparently, it's something simple. You don't need to open a dollar account. You just flood the broker. Broker will do the conversion. AIB, we already have a conversion. If you have an account in dollar, you can always flood us in dollar, we convert. If you have in Kenya shillings, you can always flood Kenya shillings, we convert. So when that comes, AIB is already prepared. We already have rates products which have come in dollars. And we expect other products to come in. Eventually now opening market to international trading. Meaning what? Even if now shares for equity continues to go up, they might even convert some of these companies to trade in dollars. And what does that mean? You may see now introduction of fractional trading. Hopefully in future, but that is the direction the market is moving. That's why you are seeing the prices are going up. Otherwise, the NSE would have been hesitant. They would have started to put resistance on the prices to make sure the prices don't go way up. There is somebody who have raised their hand. Just unmute. If you have any question, just unmute. I'm trying to enable Q&A because the chat looks like it is frozen. But I'll check with our system because I'm using Teams, the paid version. I believe that's where the issue could be. Just unmute if you have any question.
Hi,
Yes,
Peter.
continue.
Good
I'm good.
afternoon.
Thank you.
Well, first of all, let me say thank you for this session. God bless you for doing this because some of us are very new and some of the terms maybe may sound very new to us. So I think this is my first time doing trading and I opened an account with FIDA. The question that I have is I've been trying to buy like equity shares or any other shares, but I can see that I'm pending for a while, then the money comes back to my account. Is there something that I'm not doing right or incorrectly?
Okay, I think that I can answer through this presentation. Let's go back to a certain slide here.
Thank you.
Let me explain with BAT. Now, if let's say
Sure.
you want to buy BAT and you put a price of 559,
Yes.
the current supply is at 564, meaning you have to wait for the prices 563, 562, 561, and 560 to be cleared, which may take a while because if you look at the quantities on each price, if you are to multiply all the way down, we have around close to 2 million to be cleared in terms of money. If you look at the way BAT trades, in a day, it may do up to around 2 million, meaning you have to wait until all those prices they are cleared. So the likely scenario, the reason why you find money coming back as a beginner, let me go to the online trading platform. Let me share that. And thanks for asking that question, because I've seen most of the investors, when they are placing their order, they ignore the price, the way the prices are arranged, and use the range here. I'm not sure whether you can see that, and use the range here. This range doesn't show where the demand and supply is. If you are to go to BAT, let me just pick BAT here. BAT pick. You see the range is 506 to 618. Somebody will be tempted to put at 5, let's say 510. But if we go to our presentation, let's go to our presentation. If you put at 510, then the presentation says otherwise in terms of price. The current price is around 564. So meaning you have to wait for the prices to come down. And remember, when market closes, since the broker have not debited your money, they usually broke. They only broke. Yeah. Let me show you how they broke. I can place an order. I don't think there is anything that can happen. The market is closed. Let me just do it practically, because that way, if I place an order practically, you see now what happens. If I put let's say one share of BAT at 510, because it will allow me click buy and confirm. That order is all placed off market. If I go to available funds screen, let me open that. Notice there is a pending buy order around 6,000. But in my ledger balance, it is not debited. This order, until it executes, the broker will block that money. Now, what happens if I cancel that order? Let's cancel the same order. It is here, that screen. Order status. Refresh. Get the BAT, cancel buy order, cancel. I have cancelled the order. If we go to available funds again, it is still there. I need to refresh. Let me refresh. There must be another order. Let's see if there is another order of BAT, because it is cancelled. It's supposed to refresh. Let me also remove gold. Refresh, cancelled, refresh. Basically, in my available funds, there should be nothing. That's what happens. So they broke the money pending buy order, until the order executes. Now what happens? If prices don't come down, the orders will be cancelled from NSE, reverted back to the system. And now there is a likely scenario when you are placing the order, you place it as a day. Here, validity. If you put a day order, at the end of the day, when the market closes, that order is fully cancelled. It expires from the system. So what I would advise, when you're placing the order, always change this to GTD. Good till date. It is there on the app. On the app, there is day GTD at the validity. Select GTD. Then on the calendar, give it 1 week. Then you submit your order. So even if the order doesn't execute that day, the following day it will be refreshed until 26th. And the reason is the market may be going down. Huh? There is a likely chance your price may execute at one point. So when you're placing the order, first check the order book or market depth for lower prices. But again, check the quantities so that you don't place the order way below the support level. Like if it is BAT, if I go the price of 559, I have to wait all these other quantities to be cleared, which may take a while. So the easiest, just put maybe 561 to 563 based on the 3,000 quantity that is there at the price of 560, because that before it clears it takes time. Huh? So you use market depth to gauge the price. Mostly take the first 3 prices, that range, as long as there is no many shares and price is not going up. If price is going down, that's when you put a low price. So the likely scenario is that you are putting a very low price, then you are putting it as a day. It will be cancelled. So that order will be cancelled. You have to place again the following day. So always check. That's why I always advise multitask between app and portal. Portal, check the graph. Where is the market going? Is it going up or down? If it is going down, then put a lower price. If it is going up, then put the first 2 prices on the bid, either 563, 562 or 561 if the quantities are not that huge. However, if the graph shows the market is going down, you just click on 1 month, see where the direction is moving, put a lower price. Because now the prices will come towards you. Hopefully I've answered your question.
Yes, you have, Peter. Thank you so much.
Okay, thank you. And thanks for asking on behalf of Redis.
Thank you.
There is no other Redis who is willing to unmute. Let me check if the I'm not sure. I don't want to terminate the meeting, then we join back to allow the chat. That's why if you have any question, just unmute. I think I've identified where the issue is. It is on the team settings. Just unmute. And don't shy away, just ask any question. That question can easily make you make mistakes in the market if you don't ask. Unmute. Don't even lift your hand, just unmute.
Okay, Peter.
Yeah?
Okay.
I have a question.
Okay.
Okay, continue. There's somebody who had unmuted before Ted.
Okay, you said that one can change the broker.
Yes.
You said that one can change their broker. Which process does one go through?
What you do, let's say you have an account with, say, Equity, and you want to move to AIB. You come to AIB first, you open the account. So on the digital platform, we have open new trading account, fill in your details, submit. There is a point where, let me share that screen. I just show you. And it's not a must you use the AIB. I think the trainings here, they are open to anyone. If you want to use any broker, as long as they have digital platform, you can easily onboard, or you go just fill in the manual forms. I'm waiting for the online trading. So you click on open new trading. On the app, you just skip the first screen. The second screen have open new trading account. You have now the screen that you can see there. Fill in your details. There is somewhere it asks whether you have an existing account with another broker. You just click that, put the same CDSC number we have with the other broker. That makes it easy for you to get that CDSC account the same day. Fill in the full KYC, submit to the broker you are joining. Once they open and you get your CDSC number, the next step is to go to the other broker, now Equity. Go and ask them, I want a transfer form. They will give you, fill in the shares you have with them, make sure they sign. You sign first, they sign, they stamp and sign. You give them a copy of ID, they stamp and sign. The reason why copy of ID requires to be stamped or passport, it confirms you had gone to that broker, to CDSC. So once they stamp, scan everything, send to the broker you are joining, now AIB. Pay 200 shillings to CDSC, it is paid directly. The broker who is receiving you should give you the details of payment. Pay to CDSC, that M-Pesa message, the confirmation code, just remove the balances. The confirmation plus the amount sent to the broker who is receiving you. You just continue trading. You just wake up one day, refresh your holdings, find them there. That is the process. You don't need to close any other accounts. You don't go to Liquidate and tell them to close. You just leave them. Your account will still be active. If they have dormancy on their side, it will be dormant on their system, not in CDSC. CDSC, there is no longer dormancy. And you continue trading with AIB as if Equity was not there. AIB, wakikupatia shida, you just open with another one, transfer. So transferring from a broker, just open account, initiate a transfer from your original broker to the new one. Just leave it there. The new broker, when they receive your stamped ID, they also stamp it. You, at that point, you are not involved. They stamp, write a letter to CDSC, submit. CDSC, they can see the two stamps. They know original broker saw you, the new broker saw you, so they just swap the shares. In the database, they just remove B12, they put B whatever, now the new broker. When they upload the file in the evening in your portfolio valuation, you now see the shares in the new broker and you continue trading. That is a simple transfer process. And no broker should tell you you cannot transfer. As I said, there is CMA. If they prevent you from transferring, you don't even struggle with them. Send another email and keep quiet. Send another email after 1 month, keep quiet, another 3 months. The prices are moving. Just write to CMA. You wanted to transfer to another broker when prices were down. Right now prices are way high. The broker made you miss the opportunities because you can't access your account and you have made losses. They'll be forced to transfer shares first, pay you the balance as you sort out now the issue. You know, immediately they pay you, you know that there is nothing else now you are resolving. That's why you see, when you request a broker for transfer form, they will not even hesitate, they will send you directly because they know the implications. The penalty is not below 1 million. Huh? No broker would want to lose money because of issues they can sort quickly. Hopefully I've answered that question.
Yes.
Okay, Ted, you had a question?
Yes, Peter, thank you. Oh, my question was is in regard to TCL, TransCentury, yeah?
Okay.
Now, because I think it's still frozen, the company, how long should one wait, or we just have to just wait until it's unfrozen and now we can continue trading?
Okay, for TransCentury, the case is different from Akina. I think there are two shares which have been suspended, TransCentury and Mumias. Let me start with TransCentury, and thanks for asking this question. TransCentury, they defaulted Equity bank loan. So they had taken a loan, they defaulted. They had that case which went to the court. Then when CMA evaluated, they realized the balance sheet for TransCentury and the loan that they have defaulted plus interest, the balance sheet assets cannot be able to pay that loan. Meaning, shareholders have to foot in, meaning your shares have to be sold to pay equity. But were we there when they were taking loan? No. So CMA decided, let's first suspend TransCentury until they resolve that issue. Either Equity Bank writes off the loan, which is very unlikely, or TransCentury pays the loan. Until that court case ends, CMA cannot unsuspend. So what you can do as an investor, just leave the shares there. There is nothing that changes. The number of shares are still there. Price movement is not there because there is no trading. But when it resumes trading, you already know they defaulted the loan. Nothing stops them from defaulting. Just sell them off, move to another share. Now for Mumias, again, company valuation goes down to a near zero value. CMA just suspended it until another investor interested in it comes and pumps money. Remember, government can't pump more money. They have done the best they can do. But now politics from Mumias ate that company. So for Mumias, I think Rai, the one who owns Cabra Sugar, wanted to revive Mumias and he wanted to buy it. But somebody saw it wise to go to court and stop the process. So when people want to help the market, others just come and destroy the process. We would have bought, shareholders are paid, and the process continues. But again, look at the value that the investors would have been paid. Even that person maybe who went to court also saw the value the investor would have been paid. And again, this company have loans. So when it is sold, it is loans first and creditors before shareholders. Again, shareholders would have gotten something small. Instead of that, they usually decide let the company be suspended until such a time that they improve on their performance. But unfortunately, there is no rule in CMA that dictates how long a company stays suspended. So they might be suspended for quite some time. The best thing Equity can do is auction the company, but being listed at NSE, there is a process, which means even shareholders won't agree to it. So for Transentially, let's wait for court case. Hopefully they are still in operations and they are making profits to pay the loan, or they are clearing the loan. Once they clear, it should be back. But when it comes back, the best thing you can do, don't hold on those shares, just offload. So that duration is not known. It is dependent on Equity Bank. If they can write off the loan, the better. But then if you can see they are going to the court, then it is substantial amount, which they may not be able to write off. And remember, KRA also introduced something on non-performing loans. So even Equity now will try and hasten that process so that they get their money. Hopefully I've answered the question. Any other question? Just unmute.
Yes, thank you.
You just unmute today. I think we have flexibility of unmuting. I think even in the next trainings, I'll be unmuting. I can see we are already organized. I was fearing because now if you unmute all of you, then initially we used to have close to 200 people now unmuting. But I have seen there is some improvement. I think going forward, we should have now an interactive Q&A. And remember, this is your training, not my training. That's why I call it free. So if you don't have to ask the question, well, don't shy away. You can even ask on the group. My number is there, WhatsApp number. Reach out. We'll be happy to answer your question. Just unmute. And I believe today there was a problem with the link that I shared. I can do a recap tomorrow. I'll post on the group so that I can just run through what we have done today as I go through international stocks. For international stocks, I want us to use Interactive Broker. For those who are not able to FAD, we can use Scope. So I'll go through the two processes. Then after that, now we have this continuous training. I'll also introduce boards, that is treasury boards, treasury bills, and corporate boards. We first go through, I'm not sure which day, maybe I might need to alternate, but I'll also find a weekday, maybe in the evening, so that we also go through account opening process, so that those who are interested in government boards, they can continue investing. Then we also come now to money market fund and special funds. Then we go to pension. If you don't have a pension, please, I would advise, please have one. It's very important. Remember, pension is not something you can withdraw. Even if there is a proposed bill to allow that, I would advise we ignore that bill and pray it even backfires. Remember, pension, when you save, you can't withdraw until retirement. Meaning what? At retirement, you have already a guaranteed income. And here I'm not talking about NSSF. Forget about NSSF. Actually, NSSF, think of it as a government product. Have your own personal, either company sponsored or your own individual voluntary contribution. Save for your retirement. In 2007, I used to say I was young. 20 years have passed. Right now, I'm chasing how to build my pension. Because I know the next 20 years I will not be in the industry then. And that's time you need something to support you. So you have shares, you have international market, you have boards, you have money market fund, add pension. Have as many investment products, especially those ones which they have a lock period where you can't withdraw. Let your money compound. Even in shares, I don't know how we are fearing introducing products which can lock your money because regulator will not allow even NSE, like a savings product where when you buy those shares, you don't hold. But then NSE, because of price volatility, you can't lock somebody's money. If prices were guaranteed, you would introduce a product where you are locked until retirement. You are just like saving, but guaranteed dividends as you save, and also price movement. I wish we could have such products. And as I said, new products are coming in. That's why I did this training, and I'm happy to repeat it. I will ask on the group whether they propose whether we can, because there are so many people who are not able to join. If they're happy, I repeat it tomorrow, because international markets, I just need to do an introduction and account opening, because you can't do trading without accounts. Once we complete that, we can come back and go through the same process we have done today. Hopefully, being a Saturday, hopefully most people can agree to that. Any other question? Just unmute. Unmute. Feel free to ask. Yep.
A quick one, for the pension fund, which is the best fund, say, to invest in from personal, not even from let's say company contribution, but personally?
In terms of pension, it requires you have somebody in because of getting those statement and customer surveys. Mine, I use EN Wealth and Britam. EN Wealth, they have a very good customer service, and their interest rates, they compete with Britam. At one point they are high, at one point they are low. Especially when NSE is improving, you find most of pension funds, they usually give good returns. Then Britam, because of the backing of insurance, that's why I prefer it. In case of anything, they are always insured by their own company. Again, there is a CIC, there is Jubilee, especially this strong insurance company. There is also Old Mutual. What you only need to compare is the returns, but remember returns keeps on fluctuating. At one point you find the EN Wealth giving high, the next time it is Britam. Most important, customer service and ease of access of that account online. For Britam, they have an app and portal. EN Wealth, they have a portal which you can always track. In terms of allocations of annual interest, EN Wealth, they usually do around March. Like now this month, I expect to see now my compounded interest. And for them, it's compounding. Whatever you invested last year, this year now it will run interest as if it is a new investment, or interest and last year plus your deposits. This year they'll be earning interest. That is the power of compounding. I can't, if I was to show you my pension and I contribute very small amount, you wouldn't believe, because of that power of compounding. At the start, it's the same as shares dividends. At the start, you don't see any gains, but if you are investing, you see gains. Same as a pension. If your pension keeps on, is a compounding one, not, I don't think there is any which doesn't do compounding. Compounding is where last year's interest is eligible to earn interest this year. Then the amount that you deposit this year, each earns interest based on the period, the remaining period of the year. Because what they do, when you give them money in March, they will invest in March in shares. So they'll be earning capital gains and dividend up to December. So you're only entitled for that period. So if you find a good pension that is able to give you access to your account and customer service, be happy to go to it. But mine, Ian Wealth, Britam. And one which has a drawdown plan, you always check the plan you're getting in, whether it is a drawdown or it's a lump sum. Lump sum is where on retirement you're given everything. Drawdown is where you're given a portion, then the other portion during your retirement you're paid in form of like it is a salary monthly. So always check. Now based on that you can decide which one to get into. And I'm happy to do this training so that I think I will also be introducing at some point a training now for pension, so that people now start understanding. Any other question? I think that so that I had prod today's video, I think we can call it a day. I should be sharing this video, and also tomorrow I will propose in the group we also do a recap, even if not detailed. If time allows, I will still go through it because of those who didn't manage to join. I will try and use the same link. I will not recreate. I will use the same link so that even those who are joining tomorrow, we just continue from where we started. Thank you so much. Let's meet in the next one, and thank you so much. There is Peter. Peter, you can ask your question. Peter, you can continue. I can't hear you if you are talking. Peter, you're not audible. You're a bit faint. Come close to your mic. I can't hear you. I wish the chat was working. Maybe mute, then you unmute, because I can't hear you. Yeah, now you're audible. You can ask your question.
Yes, I'm Peter.
Okay.
I'm asking about the transfer Okay, long ago from with the Safaricom.
Okay.
I bought the shares of IPOs from Safaricom with Centum.
Okay.
And I tried to reach those who are working at Centum to do the transfers, because I opened an account with AIB.
Oh, okay.
Now they told me that I'm supposed to go up to Nairobi so that I may fill those forms. Can I do it online?
You opened account with who? AIB?
Before I bought Safaricom shares with Centum.
Oh, okay.
Now I open an account with the AIB, which I'm trading with the AIB currently.
Okay.
So I wanted to transfer those shares from Centum to AIB.
Okay.
They told me that I must go to Nairobi so that I fill the forms and then they do the transfer. Can I do the transfer online?
For Centum, it is a different arrangement. Centum, they are more of a fund manager.
Yes.
The transfer, they may need to see you. If it is broker to broker, that one, they send you the forms online. For Centum, it's because the account is not held by them. It is held by a custodian who could be a banker.
Yes.
Now, transferring from a custodian to a broker is not easy. You need to go to the fund manager. There is a form they will need you to fill in. After that, now they can initiate the transfer.
Okay.
For that one, you may need to go there. The other option is to sell. If you are in a profit, take that money, then come deposit it in AIB, buy more shares.
Okay.
So if it proves difficult to go there, you can always send them a sale request. They sell, they pay you, then you can deposit with the broker, maybe buy other shares.
Okay. Another question.
Yeah.
On Wednesday, I bought BAT shares at entry point of 566.
Okay.
Which I used the GTD, but I used the GTD with the intra for 1 week.
Okay.
No, now I bought the shares when it reached the time for closing, they closed, and I tried to cancel the transactions, but what I'm getting on the screen is that the stock is not available. I think I shared this problem with you.
Okay.
And even yesterday I tried again to do
cancel
the transaction, to cancel and do the transaction, but still the stock is not available. How can you advise? Because I know maybe there's other person can the same problem.
Same issue.
Yes.
Oh, okay. Your issue we identified yesterday.
Yes.
What usually happens, and I think it's a balance in the broker. For us, we close the system the previous, like if today was trading, we would have closed the system by 5.
Yes.
So when you try to amend the order after 5 and it is not the following day, the system may remit you. So you tried to amend during the date when the system was way ahead with 1 day. So it's like you amend today, but the system date is tomorrow. So we raised that with the developer. It's actually a system glitch because of us closing the system early. But we have to balance between now. If we don't close early, it means we close the system the following day, delaying the market. We are checking with the developer. They should be able to cancel. You can also try today. If it doesn't go through, you can let me know so that by Monday morning I initiate the cancellation from the broker. It's because of that cancellation done the previous day when the system is the following day.
Okay.
But that should not worry you. It's something that I think the price that you had put was way up. I think you had put around 588. That price, with the current prices going down, the sale order may not execute. I will also check after this. I check whether the system was closed yesterday. That time, I and you should be able to cancel. If it doesn't go through, Monday I'll let the developer just cancel from the system.
Okay. Thank you.
Okay, welcome. Any other question? Just unmute. Ladies, there's nobody with a question? If you have a question, just unmute.
Hi, Peter.
Yes.
Just a question for people who are abroad. Is there a way you can talk about the pensions that we can get into as people who are abroad in Kenya? Thank you.
Oh, okay. I think in terms of pensions, it's the same question that had been asked earlier. Let me just get my... So first of all, I hope most of you understand or maybe have a basic understanding of pensions, the way they work. You are saving while working. Part of your either salary, either you are self-employed or you are employed. If you're employed, the employer should be able to deduct and pay. If you are self-employed, you are able to pay that is deposit into your retirement account. Pension is more of a retirement account, and it is fully regulated by RBA, that is a Retirement Benefit Authority. So it's more of a long-term thing. So when you start contributing, you don't stop, first of all. Secondly, you can't withdraw in between until the law is changed. I think they had proposed, they changed the law so that in between, if you want to withdraw, you can withdraw. I'm very sure they would allow maybe just once you withdraw, but with a reason. So pension don't allow you to withdraw. You continue monthly deposits. Now those deposits, every month you deposit, it is that deposit is eligible to earn interest from that month all the way to the end of the year, December. So if you deposit January deposit, they earn from January all the way to December, February to December, March, the same thing. No? If you start in between again, for the duration between the month you're getting into to December, it continues earning. Then at the December, the full amount plus the interest is compounded. It is rolled up to next year. Now, together with January's contribution, they earn up to December. Again, continues like that, and up to and including the period of retirement. So you earn through interest, because once you deposit with them, they use that money either to invest in NSE. You have seen NSSF invest in NSE. I think everybody now already understands what they do with your money. Invest in NSE. We saw it in IPO. Dividends that are paid, they pay you as interest. If they sell at a profit, that profit is added. Now at the end of the year, it's calculated as interest. There are others that invest in international markets. So that's how they pay you your interest. It continues until your retirement. So there is the mandatory for those who are employed, NSSF, which is compulsory for anybody who is employed. Employer deducts some money, sends to NSSF. There is Tier 1, Tier 2. Tier 1 is retained by NSSF. Tier 2 is you as the employee to decide, do you want it to go to individual pension plan or do you want it to go to NSSF? I would advise if your company doesn't have a pension plan, just get one as an individual. Then ask that pension provider to come and talk to your employer so that Tier 2 goes to them. It earns higher interest when it goes out of NSSF. Remember, NSSF, they give small amount. So Tier 2, you can contract outside, maybe somebody like AEN Wealth or Britam, so that your employer now sends it to them. Now that increases the chances of your earning higher amount. Then also as you continue contributing the normal way. If you're self-employed, then you can get an individual or personal pension where you as an individual, you are paying directly every month. You continue contributing and it continues earning interest just like any other pension plan. As I said, they invest in most of them bonds, treasury bills, NSE shares, international markets, rates, that is real estate, and other private equities. Now, in terms of the companies you can get into, I've worked with AEN Wealth. I've never had any issue with them. They have a very good customer service without me having a contact person. You just call, whoever picks the phone will help you. That is AEN Wealth. Then we have Britam. Britam, again, I've never had any issue. Then there is CIC and Old Mutual. Those are the ones for now I would advise. But as we start now training, because I've seen there is some interest on it, I will come even with more. So that at least if you're outside the country, you can just onboard on one. Just shoot them an email, let them send you the forms, fill in. Once you get your account number, onboard yourself online where you can be tracking. I'm very sure most of us have access to M-Pesa. You can always deposit. If you don't have access to M-Pesa, just do a bank. You can set up maybe a monthly recurring payment to them. through your bank. I'm forgetting the name, but once you set that, you just be receiving money. You just make sure your account is funded. Then they'll be crediting your account. That way, you have a controlled way of depositing. I think even M-Pesa you can do the same. I'm forgetting something. Starting order. You just do a starting order with your bank. I think even M-Pesa they allow that. You can set it up to automatically debit your M-Pesa, set to the other pay bill. You just make sure you have put the right account. That way, you have the investment. I can see the chart has come back. Okay. Then I think it is office teams which had an issue. Hopefully, most of you have not dropped. I don't know why there was lag. Actually, it has come now with all the questions, and I can see there were other questions. Let's do this. Let's repeat the same session tomorrow together with the international markets. I'll be happy to answer all the questions that were raised. Actually, right now it is the time the chat have come back. And I can see there were good questions, so sorry for that. But I'll check why it hung on my side. But tomorrow we can repeat the same. Any other question? You can just unmute. No need to put on the chat. Just unmute because we have already allowed unmuting. I think even tomorrow we should do the same. If you have any question, just unmute. Don't put on the chat because I can see it is loading right now.
Peter, lastly, what time is the tomorrow? What time are you proposing the meeting tomorrow?
I can propose 10, but in this meeting we can agree what time you are available, the best time.
And is it a general question and answer, or do you have anything specific for tomorrow?
Tomorrow, we are first going through international stock trading and opening account with the Interactive Broker and Scope Market. Right. Then go through an overview of NSE just to answer the questions that I wasn't able to answer today. And maybe for those who join, tomorrow I also go through the same brief we have gone today. Then after that, now Q&A. Then tomorrow we can decide maybe one day, maybe next Saturday, we have it purely for Q&A.
Okay, and I heard you talking about the government bonds and bills. So do you have a proposed date for that? Because I think most of us are also interested in that.
This Sunday, I'm doing government
same
bonds.
Time?
Now for Sundays in the afternoon because of those who may be going to church.
Right.
But I will propose on the group I see what time people are available. Are you available from 2 p.m., 3 p.m. there?
Yeah, I am.
Oh, okay. I think we can do the same time, 2 p.m. But for Saturdays, 10 a.m. so that I allow people in the afternoon to go back for those who may want to do work.
All right. Thank you so much. I really appreciate it.
Okay, welcome. Any other question?
That's the point.
I think with that we can call it a day, and thanks so much for coming. Ukitaka kununua sonda, it's up. I leave it to you, but all these trainings will be free going forward. And at one point I tell you why I'm doing this for free. Maybe way down the line. You get to know why. There is a lot that has happened in the market, and I don't want you to follow victim to that. I don't want you to follow victim to that. You know, brokers are there in the market to make money. So I can see BG and J here, you have unmuted. If you have a question, just ask. So there's a lot that has happened in the market. Always remember one thing, an agent earns commission out of you. I hope I've given you an idea. An agent out there who is affiliated with a broker, even broker themselves, they make money out of you. There's a recommendation I saw contradicting, one broker saying buy and another one sell. And I asked my question, which one do the investors now follow? Because You may be following both brokers. One is telling you to buy, one is telling you to sell. That tells you what is happening in the market. The broker wants you to buy, they earn commission. They want you to sell, they earn the commission. And I'm very happy somebody in the group answered that question indirectly. They said brokers make money out of your trades. That's something I don't want to happen to any one of you. You are there to make money. There is a question, Jaya, you had a question?
Yes.
Okay. What is
Asking,
Yeah.
what is your advice between the bonds and the money market fund? Going to the fact that the interest rates for government bonds, that is treasury bills and infrastructure bonds, the interest rates are coming down.
Okay.
Thank
Okay. In terms of money market fund and government boards, remember government boards interest rates are fixed. That's why they are called fixed income. For government boards, interest rate is fixed. Now, for money market fund and special funds, the interest rate is not fixed. It's based on market interest rates. So if interest rates are coming down, I would advise go to boards. But again, remember for boards, there are boards which attract withholding tax of 10%, unless you're going for infrastructure boards. But then, when rates are going down, remember if it is a newly opened board, the interest will be lower.
But there are some money market funds offering higher interest than bonds. There are some money market funds offering higher interest than the bonds.
Yeah, most of them, you find there are those ones are calling special funds. Because them they invest in international markets and also real estate. They're able to guarantee you that high rate. But again, with that high rate, always check the management fee. It is hidden in those interests. Even if they tell you it is net, it is usually not net. Because remember, interest is posted daily. So you as an investor, you don't have time to calculate that interest. You may find at the end of the year what they are giving you is not the rate they told you. So if you're comparing now in terms of high yield money market products, always check the risks you're getting into. If you're yield-based investor, because we have two investors, there is investors who just look at getting the returns, and there are those who look at returns for the money they invested. They want higher returns. I can advise you go for special funds, Akina Mansa X, Oak Fund. Put a lot of money there. But again, you don't want to put all your money in one basket. Put some money in boards, but not a lot.
Thank you.
Yeah, always balance. Put some money, even in shares. I wouldn't advise you put all your money in shares. Always have a balance. Some money in shares, if you can in boards. Your money market fund, always have one, either a special fund or an equity fund, whichever you want, or a normal money market fund, and also pension, so that at least you have 4 products that are giving you enough cash. If possible, in the bank, also have a savings account where now dividends and all these interests are posted, so that when they come, as you watch the market, they're also earning some interest. Then at one point when now you make decision, you withdraw together with the interest, put in the product you want. Hopefully I've answered your question.
Yes.
Okay, karibu. Any other question? Uliza hata in Kiswahili. Ask. This is an open platform. If you have a question in Kiswahili, Sheng, but sio ile Sheng deep. That one I may not be able to understand.
Chege?
Yes?
I have another question. It's kind of a personal question. I have a chama.
Yeah.
And we've been investing in, or rather putting our money in Etika.
Okay.
And I think we have like $1 million now. So we are trying to see where we can invest the money rather than just being an MMF. I know it's earning a couple of interest, yes, but what's your advice on that? It's kind of a personal question, yeah, but I just thought I can ask you. Maybe somebody like me is there as well.
Yeah. I think what you can do, you can invest as a chama in NSE. You can open a group account. Even in international markets, you can still open a chama account. What you only need to do is make sure the chama is registered. With that amount, I can't tell you to go. There's a shortcut. If it's not registered, where you appoint 2 members, they open a CDSC account as joint, they invest. That one, with that amount, I can't advise you open a joint account because it is risky. If it is a registered chama, there is a form to fill in. You open, you get access to online trading, deposit the money, and buy high yield dividend stocks. The reason why I'm saying high yield is the stocks that move in price and also give high dividends. Like Akina PAT, EABL, Sanchat, Stanbic, in some banks that give good dividends. So that dividend, when it comes, as members, you can decide either to reinvest back in shares or take that dividend to money market fund or to boards. So that at least you have your money circulating. And at one point, when the share price goes way up and you have made enough profit, you can sell and buy another stock or move to another product. In NSE, there is a chama investment. So you can come to NSE. You can also go to Global. Global, I think the opportunities there, they are unlimited. It's not just shares. As we go through tomorrow, there is one product that is making money. Yeah. There is a product that is making money in international markets. It's called silver. It's called silver.
It's called what? Silver.
Yeah. There are people who have been making money out of it. Very good money.
Okay.
You just buy it. When the price goes up, you sell. And since it is in dollars, then that dollar conversion also can make money for you if you have a dollar account.
So are you talking about that tomorrow, right?
Yeah. Tomorrow I'm going through full blast on international markets so that people know the products that are there.
Oh, lovely. Okay. All right.
And for those who are in Kenya who are not able to open interactive broker, I will show them the shortcut. If they are not able to fund through the bank, there is Scope Market Kenya is an option where now you can open through M-Pesa. The reason why I'm saying Scope Market, the other brokers in Kenya gives you limited stocks. They don't give you everything, which tells you what? You are not trading in the market, you're actually buying shares from them. That's why I have not talked about any other broker. It's Scope Market, because I know for them they are genuine and also interactive broker. The others, they buy, then they sell to you. But the prices they are selling to you is from the market. If you see a broker who is not giving you all the stocks, then you are buying in their books, which is very risky because then you are buying their profit. When you are selling, they might be the one now buying from you at lower prices. So that will go through tomorrow. Any
Thank you, Chege.
Karibu sana. And sorry for that breach. Yeah, just ask.
Where can you advise somebody to open a dollar account?
A dollar account, I would advise on the same bank you have. The same bank you have in Kenya shillings because of transfers. Remember, you want to convert in between your accounts. Most of the banks, I&M, Equity, though Equity you may need to check, you may need to have an account manager. Equity, Stanbic. Yeah, mostly those. I&M, Equity, Stanbic, but even the other banks, ABSA, you can open, especially banks which have international connection, KCB, but also check the charges. It's only that I don't have respective bank charges for each bank. Always check whether they charge you additional cost. Equity, I know the accounts, they don't attract monthly maintenance fee, but they may have a one-off fee, maybe for ATMs, just to recover their money. Equity, ABSA, I know they don't charge monthly fee. They don't charge you to withdraw on ATMs, but they have the monthly fee. So you need to compare all those before you open. But I would advise the same bank you have Kenya shillings, you also have your dollar account, because it is easier. Conversion is same day and you don't incur transfer costs. And also confirm with the bank you are opening when you are transferring now Swift transfer outside the country from dollar to the other country, whether they charge you. If they don't charge you, then be happy to open with them, because that's what is limiting Interactive Broker. The banks charge Swift, which is way high. Unless now you're investing a lot of money. If you're investing small amount, then those costs they eat into your returns. But there is Wise. I'm trying to see the best way to work with Wise, because it works with the M-Pesa. You deposit from M-Pesa to Wise, then from Wise to Interactive Broker. I think once that is confirmed, it will open doors for many investors. So any other question? Tomorrow I'll be able now to go through. I'll check the Q&A, take the questions that were there, repeat them tomorrow. I know I'll be able to cover with the limited time we will have. But for you now, it will be like a recap of what we did today. Any other question? Just unmute. I think with that, let's meet tomorrow. Thank you so much. I'll post the links today. And same time around 10, that's when we will start. I'll start with international markets. Then we come to NSE, so that for those who may not be interested in NSE, they can drop. Then up to the time we'll finish. And I'll first test the link to make sure those who didn't manage to join today are able to join. So thank you so much. Let's meet tomorrow. And have a lovely holiday and afternoon.